All right, guys. So Nvidia gapping up a little bit today. You can see Tesla though pulling back some. Hold on, let's pull it up. There's Tesla right there. Tesla down to 289s. Man, honestly, Tesla's still up a ton over the last few days. This little baby pullback's not really that much. And maybe it keeps pulling back. I'm not saying it doesn't, but it's just not like the end of the world, like a lot of people are posting about on social media. Yeah, we're still at 290 basically, which is a pretty big price relative to where we were, a month or two ago. So again, we'll see if it holds. We'll see if it continues. I hope you guys are doing well this morning. I haven't hit my coffee yet. Just give me a second. We're going to drink some coffee. What's up, team? What's up, Freddie, Alexis, Yair, CJ, Alyssa, Damage. Good morning, guys. All right. We also have earnings today, man. We got Bank of America earnings in about 30 minutes. Charles Schwab earnings, Morgan Stanley earnings in a couple minutes. We got PNC Financial in about 13, or in about 14, 15 minutes. Mercantile Bank's already out with theirs. We had Synchrony Bank drop their numbers already. But yeah, today we got Morgan Stanley and Charles Schwab. Bank of America earnings all dropping this morning. And then we also have retail sales data dropping at 8:30. There we go. Glasses and no hat. Yeah, I mean, I don't know where my other hats are, bro. My hair's getting too long. And honestly, I had to order some new glasses because these are kind of thin, but I can see with them. So it's like, that's all that matters. I got a hat. It's an LSU hat, but I got a hat. I think I'm going to wear it. But where's my coffee? There it is. So yeah, I'm just going to rock with this today. I might buy a little bit of Tesla on the dip. It's going to be small size, though. We'll get some fills. What's a good size? Like 25 shares. Come on, bro. It's supposed to be at the, let's see, at the mid price. All right, we're in. 289.59 is where our entry is. Oh, man, we got a bad fill. Well, it depends on where we are right now. Let me see where Tesla is. Remember, we're still in. Hey, nice Yair. The music just stopped. It did, man. There you go. I'm going to like these really old playlists, bro. I've been building these playlists. People don't understand, man. People always like, hey, I like your music. It's like, that's cool. I've been building these playlists for like years and years. Like this one playlist I have literally has days worth of songs on it. And I just kind of keep building it. Palantir running. Might try to buy a little bit more into Tesla here. We bought it. We bought the dip. We'll see if it works. Let me stop sharing this real quick. Hold on. Actually, let me put this up. Let me just put my face up real quick. I gotta pull. Every time I pull Telegram up, like I work with a bunch of people off stream, and so I don't want it to just throw it up. All right, there we go. Right. I don't want it to just throw my convos with all these like workers. look at? I'm going to just look at the E-mini 1 chart. I think I'm down here in Tesla. Ooh, that's not fun. I'm going to cut this and just get out. I got to get out on the bid. Yeah, we're out. We lost a little bit. Yeah, we lost less than we lost like $20 there. I'm just going to wait. We'll just chill. Tesla could rebound back up. If it does, we might buy it again. But for now, I think I just got to wait. All right, so Tesla started to break down. The SPY's still doing okay. It's still quiet, man. The whole market's a little quiet ahead of these, ahead of everything else. Editor, save this. Open. Strategy. All right, so Tesla's starting to bounce back up a little bit. Maybe I could have held this. Is this a live stream? No, this is not a live stream. I am just an AI chat bot that just accurately predicts what you're going to ask me and then answers with it on the stream, sir. It's definitely not a live stream. You know, this is a, you know, yeah, this is not a live stream. What do you guys think the market's going to do? Again, banks dropping their earnings today. The next one we have dropping at Bank of New York drops theirs in about 10 minutes. PNC Financial drops theirs in about 10 minutes. After that, we have Bank of America at 6:45 in the morning, which is in about 20 minutes for Bank of America. We have Charles Schwab at 8:45. We got Morgan Stanley at 7:30. And then we got core retail sales data coming out later on today as well. What's up, Val? What's up, Pawn? What's up, Hugh? John, I see you buying very slow stocks for trade. Why not getting some more volatile ones? Not to say big size, but a little bit more opportunity. I was asking because you were trading Tesla before 7 a.m. pre-market opens. What did I miss? The main thing you're missing is that pre-market doesn't open at 7. Pre-market opens at 4. And I am on Moomoo, which is open the entire pre-market. So I can. The reason I switched from TOS to Moomoo is because I can. I'm gonna buy a smaller share size here. The reason I switched from TOS to Moomoo is because I can trade early in pre-market. The whole reason I switched. I don't want to be bearish just to be bearish, but I was thinking of buying puts on the Q and Nvidia and Tesla expiring at the end of August. Any ideas? Well, I think it could be a good trading strategy, but it needs to be with money you're okay with losing, because I think earnings season is starting this week, right? With bank earnings today, with Tesla earnings Wednesday, tomorrow, and so I think earnings season starts this week, and with earnings season starting comes a lot of volatility that is going to influence, the bottom line in your trades a bunch, and so yeah, I think you want to be smart. You want to be smart because earnings season could cause a bunch of crazy stuff to happen, Yeah, wait for Tesla earnings. There's a couple things just be careful. Like, you could take that position, and again, if you want to take an overall short position, I understand it, and I honestly again, I'm going to preface this with I have no idea what's going to happen. I have no idea what the market is going to do. Okay, no idea what the market's going to do. Right, but if you want to take a big short position on this earnings season, it might work out for you. Again, I have no idea, but it could work out, and I'll explain why it could work out. It could work out simply because AI stocks are extended leading into it. With AI stocks being extended, if earnings come out in a disappointing way for these AI companies, it could cause a mass push down in AI stocks. I'm not saying it's going to happen. It's just one possible outcome of earnings season. If that does happen, that's going to cause a major market correction to the downside from the AI stocks that now have PE ratios in the hundreds to correct a little bit from disappointing earnings. Now, that's under the assumption that earnings are going to come in disappointing. And again, maybe they don't. It's also possible that earnings come in great, the market loves them, and it pushes AI into another huge squeeze up. Again, they're both possible. I'm not sure what we're going to get, but they're both possible. Hey, what's up, SPAC? What's up, man? Hope you're doing good, bro. What do you think about the retail sales index that releases today? How can it affect the Fed decision in the S&P 500 index volatility? Retail sales is a pretty big release. It's not huge, but it might move markets some. We don't know. So it's a pretty decent release here. But again, we don't know how much it's going to move markets. We're going to stream it live as soon as it drops. So right now we're covering bank earnings, and then a little bit closer to those, we're going to cover retail sales. You often have a neutral and distant perspective on the markets. Your opinions are always of high quality. Thank you. Hey, thank you, Bao. Yeah, I tried to do that. Again, I don't want to be another one of those gurus giving out sleazy stock picks that are ignoring that when I'm wrong. What I see so much in the market is you got these big gurus, and they put out all these polarized bets on the market. They say, oh, well, the market's going to do this, or the market's going to do that, or, blah, 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 blah. And then the market doesn't do whatever they said it would. And then instead of being like, yo, I was just wrong here. Instead of being like that, which is what they should do, they instead try to somehow twist it for them to be right. The best way I can explain this, the easiest way I can explain this is you got a fairly large stock market guru who is constantly talking about how a big correction and crash is going to happen. They've been talking about this big correction and crash happening for a year straight, and it hasn't happened yet. And in fact, the market has pushed up huge percentages against their predictions. you'll see something where they'll be like, yeah, the market's going to crash after this next Fed meeting, or the market's going to crash after this next CPI report. And they'll make those predictions. And then the market will mostly surge up. It mostly has been surging up over the last, year plus since they made them. But instead of being like, yo, I was just wildly wrong here, the market didn't crash. The market ended up pushing up 30% actually over the last year. I was just wildly wrong. Instead of being like that, they wait for the market to do a small little correction. Like the market might drop 0.25%. And then they're live streaming talking about, see guys, I told you, the market did drop some. And it's like, yeah, but it dropped 0.25% after pushing up 30. Like, what are y'all talking about? But again, so I guess point is, especially the people who are like selling courses, like if you're selling a course, you kind of got to pretend, but I just choose to not be that. I just don't want to be that. If I'm wrong, my goal is to admit that I'm wrong and make fun of myself as much as I can about being wrong. And with that said, I told you guys that I didn't like Tesla when Tesla was at $100. And I was wildly wrong there. All right, so we're green on this latest Tesla trade. That's nice to see. Zaidi says, hey, John, I feel you on this one. I got one guru at work, and it's awful. Yeah, bro. I mean, and again, I'm not just making up these scenarios. Like I'm using actual traders that I see do exactly what I just said. Pretty regularly, and most of the time it's the crash side. Most of the time it's the market's gonna crash. A huge correction is coming, and then the market just doesn't correct and just flies up. Tesla bounced it up a little bit here. I don't know whether I should take profit or not. It's a smaller trade. I guess I could take a third of this off. Maybe it'll let me get out in the mid price. Okay, it did. All right, so we just took a third of it off, locked it in. We're still in Walgreens here. We're green on our swings today again as well. Gold, we're green on. Gold has been shipping away, man. Gold, we bought some gold a long time ago, and we were down like $100 on that. That's slowly starting to come back. Target trade is looking pretty nice. TGT. We bought that dip yesterday. We're green on that one now too. Our average is 129.54. We're at 130 basically on that one. All right, Bank of New York earnings out right now. Sorry, I might have missed it. Here, BK. All right, so BK just dropped their numbers. We also had PNC Financial drop their numbers here. We'll come back to Tesla here. We're nicely green on that one. All right, so here's PNC Financial. I don't see anything out with them yet. I do see Bank of New York. Or Bank of New York just dropped theirs. They posted a 138 beat 122 EPS estimate. Sales of 4.45 billion beat the 4.37 billion estimate. I'm going to put these numbers up on screen. There is the Bank of New York numbers right there. Yeah, a little bit light on volume though. There's PNC and there's BK. Bank of New York. They're gapping up a little bit. They beat on EPS, beat on sales, but it's still pretty light volume here, to be honest. Wait. All right, so yeah, here's PNC, just not really doing much. Do you think Bank of America will be a B? Do you think it'll push higher? I have no idea. No idea what it's going to do, to be honest, man. Hold on, I'm gonna pull up Discord. I haven't pulled it up yet. All right, so yeah, we had these come out. Nothing really crazy. No, not really any shocks to the system for earnings in these. Nothing that's really causing any type of big volatility. See, I want to get it. How do I get it to do this? What it just started doing? Do I click on that and then go like this? Can I side click and make it go like that? Can I start to mess with it and then make it go that way? I don't know. Okay, so I can just use my mouse as a scroller, which I really like. Okay, cool. All right, but yeah, so far, nothing really for PNC. Not really any reaction here. Let me see if PNC's actually out with their numbers yet. All right, so PNC came out with theirs 328 estimate. Came in at 336, so higher than expected. Sales missed estimates as well, so neutral for PNC. BK is popping up. The big ones are going to be Morgan Stanley and Bank of America. There's PNC numbers right there. We can put those numbers up in chat. We'll loop these so we can get both of these. Here you go. There's PNC. Did drop their numbers. Pretty slow today, though. We're going to put up MS for Morgan Stanley. You can see Morgan Stanley's been pumping up ahead of earnings. We also have BAC for Bank of America here. They're doing all right in pre-market as well. All right, we also are still in Tesla. How's Tesla doing? All right, Tesla's up some. I mean, it's nicely up. All right, team. Tesla's still making more moves back up here. Part of me is going to start to consider taking some more profit in this one. Just because we're up enough on it already. I think I'm just going to let it work, though. See if we can start to fill some of this gap on the upside. Lockheed Martin did they drop theirs to this today? LMT. Yeah, they dropped theirs at 7:30 for Lockheed Martin. All right, so Bank of America drops their numbers at 6:45. So we still got about 1 minute left for Bank of America earnings, and this is when it's about to drop. So let's see what Bank of America shows. The numbers should be out anytime now. Anytime. All right, so there's Bank of America. They showed 88-cent profit, EPS versus 84-cent estimates, revenue of 25.2 billion, expected 25.0 billion. So better than expected for everything for Bank of America here. Here's BAC. Bank of America just dropped theirs, and they are gapping up from it here. So they are out with their numbers. Gapping up some too. Look at this. So this is them so far here. For Bank of America, they're gapping up this morning in pre. It's better than expected for Bank of America. So it is better than expected. PNC Park, top 3 stadiums. Yeah, man. It is a pretty park, man. That's a pretty park, dude. It's got the background, the cityscape. Never been myself, but it looks cool. Is it bullish? I mean, I don't know if it's bullish or bearish. I mean, it's better than expected, which is always good, but you never really know how stuff like this are going to react to earnings. You just never know. All right, so yeah, Bank of America posted second quarter revenue of 25.2 billion, second quarter net of 7.4 billion, EPS beat estimates, sales beat estimates, net interest income came in at 14.2 billion, which is up 14% for Bank of America here. 14%. There's the number right there. We're going to drop some of these data points in chat. Net charge-offs came in at 869 million. Non-interest income came in at 11 billion. We got Morgan Stanley coming out at 7:30, so we still got about 45 minutes. Bank of America is falling now. Well, let's pull it back a little bit. It's not really like a huge pullback. But we're just mostly in this range, kind of like you can kind of see the documented range right here. We're in that little range. And again, we'll see if we break out of it. I'm looking at it. We'll see if we hold. But we're just kind of in this range. We'll see what we do. Anything else that looks good today, guys? We got about 200 people here. Subscribe if you haven't. Hit the notification bell. I certainly appreciate it. I'm going to go ahead and lock some more in for Tesla here. Just going to kind of lock in that. I'll take it. Still in a target. green on Target. Still in Walgreens too. Walgreens had a little bit more red action yesterday, but again, I don't mind holding these. A lot of these are going to depend on what they do, what happens for earnings season. These in Bank of America earnings show how customer moves from small banks to big banks, don't you think? Yeah, and again, I agree with that. I think that's probably what happened. You know. Disney looks spicy to buy at these levels. Where's Disney at right now? I mean, I'm green on Disney a little bit today, but red on the last trade. Ooh, Disney's at $85, bro. Ooh, man, I'm buying this, dude, for sure. Can't buy it yet. But I got my order just sitting there. I'm gonna wait to get filled at the opening bell. Again, Disney at $85 is cheap. Is the rate hike tomorrow? No. Tesla earnings are tomorrow, but the rate hike is going to be in a week from now. On the 26th is when the rate hike ceremony is going to be. All right, so we have pulled back. Again, we're still in that range. I'm going to add a little bit more to Disney. Luckily, I've got like 20 shares of Disney. So it's not even like my position's huge on Disney. I've already taken most of the profit when it bounced up to the 91s on Disney's trade, you know. All right, guys. So again, we're sitting tight here. We still got about 8 minutes before the closing bell. The big earnings that are coming out next are going to be Morgan Stanley at 7:30 in about 40 minutes. We have Schwab dropping theirs at 8:45. Bank of America just dropped, and again, they initially reacted positive. They're pulling back a little bit now. We also have Cambridge Bank dropping at 7 a.m. So Cambridge Bank at 7 a.m. We've got Morgan Stanley and Lockheed Martin at 7:30. And that's the big ones coming out. And then after this, we have, after these banks, we have core retail sales data dropping. So that's big too. All right, guys, and then we do have core retail sales data coming out. We do have Morgan Stanley earnings. Gold SOV looks bullish for time. Interest rate hike coming. I think we're going to raise rates too. I think we're probably going to raise. I'm going to do a poll right now. Interest rate hike coming. Yeah, I'm going to do a poll. And again, that poll is going to have to do with rate hikes. So do we raise rates? We raise rates at the next FOMC meeting on July 26th. Vote on that poll. Let me know what you guys think. Do we raise rates, guys? I think we 100% raise 25 basis points at the next one, but the question now is the last. I think gold is pricing in. J. Powell promised rate hikes, so we are not allowed to be surprised. Yeah, I think we're going to raise rates, and I think that's probably pretty accurate in that, like, they don't want to surprise us. Like, I don't think they want to surprise us. I think if they surprise us, I think a surprise is very rare when it comes to rate hikes. I just think that it's probably not going to happen in terms of, like, a surprise. I think we'll probably raise rates, and, you know, we'll figure out what we're going to do at the next one. All right, so retail sales today, yeah, 25 basis point rate hike is probably going to happen at the next FOMC on Wednesday of next week. Today, we also have retail sales data coming out. So retail sales data is expected to show. Right. Yeah, so retail sales data is expected to show at 0.5% month over month for retail sales data. Core retail sales data is expected to show up at 0.3%. And again, we'll see what happens at 7 a.m. in 3 minutes. Yeah, guys. So all right, team. So again, we do have Disney pulling back some. Once that bell rings, I'm going to buy some more. All right. Bank of America is still pulling back a little bit. Again, in less than a minute, we do have Cambridge Bancorp in less than a minute. Expectations are 118 versus 40.61 million in sales for Cambridge Bancorp. All right, so the CEO of Bank of America said, quote, "We continue to see a healthy U.S. economy that is growing at a slower pace with a resilient job market," end quote. You're going to put that up on screen too, just so you guys can understand what's going on. All right, so Bank of America started to bounce up a little bit. I'm still waiting for this one to show up here, and I don't really see anything yet for Lockheed Martin. No, it wasn't Lockheed Martin. It was Cambridge Bancorp, so CATC. They did drop theirs. They posted adjusted EPS of 123 versus 118 estimates. If we pull them up right here for Cambridge Bancorp, which is CATC. They're at about 58 right now, so they haven't really moved much, but they did have better than expected EPS at 123 versus 118. Revenue came in light, though, at 39.8 million versus 40.61 million expected here. I could also buy a little bit more of Disney, and so that's what I'm going to do. I'm going to buy up some more Disney here. So we just added some more to it. We're going to keep adding a little bit to this, try to establish a position here. There we go. That should be good. But again, I don't see anything really moving here for CATC. They did drop their earnings. The next one is Morgan Stanley. That's going to be coming out this morning at 7:30 in about 30 minutes. Nothing else really coming out right now. We had Synchrony, we had PNC, we had a bunch of other ones, but that's it for now. Well, Bank of America is up so much. Again, the reason earnings plays are so difficult is you might think something has good earnings and that you should just buy it up. With earnings, it's not really like that. With earnings, you don't ever know what anything's going to do or what's going to happen here. And so sometimes like stocks that have already made big moves on the upside, they're going to correct a little bit even if they have good earnings. It's one of the reasons you always got to be really careful. Yeah, man. Pawn and I are talking. I'm not going to be specific about what Pawn and I are talking about, but it's absolutely true. Honestly, sometimes in life, man, you get people who act like you're going to struggle, or they act like you're a problem, or they act like, they're better than you, or however they want to act, right? One thing I always teach my daughter in life is that success is the greatest revenge you could ever have on anybody. It really is the greatest revenge you could ever have on anybody. You don't have to be mean, you could just let, everything else talk. And yeah, feels good, man. Feels good. But yeah, Bank of New York, or Bank of America, just kind of sitting here. We're still waiting for MS, for Morgan Stanley. Morgan Stanley is expecting 114 EPS on 13.51 billion in sales. I don't think Bank of America will be good. Well, Bank of America is already out. They did better than expected EPS and sales, I believe. You can see BAC right here on the left. So they're already out with theirs. This is theirs right now. My screen only showing visit advertiser, and it says big earnings, and it says 1 of 2. There's no ad playing. Okay, well, it sounds like your screen froze on an ad, is what it sounds like to me, Stuart. Yeah. Is BAC a buy? Now, I'm never going to say anything's a buy or sell or anything. I'm really not. All right, so Nvidia breaking highs again up to 468.30s. Look at Nvidia here, guys. So Nvidia is pumping. So again, Nvidia up to 468 right now, really moving up. All right, man. How you doing, man? Yeah. Oh, okay. All right. Okay, no worries. All right, guys. So yeah, we are sitting here. We got Bank of America out with theirs already. I did add a little bit to Disney. Nvidia is surging up. All right, guys. So again, we are trying to hold. We're consolidating. Nvidia, man. Again, I'm in this SOXS trade, so I am in SOXS, and we are losing on this one now. Believe it or not, we're down less than $10, but. Hey, what's up, Chris? Yeah, Disney's so cheap; it's at $85. Even if it keeps dropping, I might add some more to it. But some research shows that Tesla may not be cash positive next quarter due to price cuts. Maybe. How much more do you think Tesla can rally before its earnings tomorrow? I'm not sure. I'm still in a little piece of Tesla, and Tesla is up big here, man. Let me probably take profit on this trade. I'm up. I'm up so much in it already. And this effectively brought us green on Tesla on the day, which is nice. Let's go ahead and cut the rest of this. It's just a small position. So we were out of Tesla right there. We just cut it. It's a small position. But not bad, man. Not bad. We're still in Walgreens, and we're also in Target as well. I can see Tesla crossing 300 before earnings. Maybe. What temp is you guys today? I'm not sure what temp it is here. All right, so we're just kind of hanging out. Tesla testing the VWAP in the previous closing prices, which is a pretty big level, and you can see Nvidia start to surge up. We still got less than 20 minutes before Morgan Stanley drops their earnings, and then we're going to cover the retail sales data. All right, so again, I'm looking at Walgreens here. Tesla right at 290, and Tesla could break 300 if it keeps popping. But look at Nvidia, man. Nvidia having a great day. Nvidia all the way up to breaking highs consistently in pre-market this morning. So Nvidia moving up, and this is ahead of earnings. So ahead of earnings, man. Nvidia earnings aren't going to be before a little bit later, but still ahead of earnings. All right. Nvidia might be moving. Yeah, and again, the question is, does this hold? Because that's the real question. Is does this hold during the earnings plays? Remember the summer months, volatility's light. Yeah. Yeah, it's typically over 100 degrees here for sure. But man, Nvidia's still pumping up here. Again, we did buy some Disney. I'm still sitting in Disney. I don't mind giving Disney a year if I need to. If I really need to, I don't mind giving it a year. We just added a little bit more. Like, we're not down much, less than $100 on the current trade. So I'm gonna give it time and see if we can get some better gains here. All right, so again, there's 470 on Nvidia here, and I'm looking at 470, man. These are just crazy gains. The high of the lifetime high for Nvidia right now is at 480s, basically 480, 88s. So all right, so I'm looking at a couple different things here on TradingView as well. I'm waiting to see if we get some patterns that show up. We still have 13 minutes or so. And again, I really do want to see if Nvidia pumps up more. There's some other market news today. Let me see if we can find anything else that looks good. Gold just pumped. Did it really? So let's take a look. So gold slash GC, if you ever want to see what gold is doing. Gold did just pump. Hey, you love to see it, man. Again, I'm in gold too right now. So I'm in gold too right now. I'm in the GLD ETF, which is basically just gold though. Can you switch your candles? I can't see the green ones very well. Yeah, I got you here. All I should have to do is this, I think. There should be a way for me to edit the candlesticks. Let me see. Chart type, filled candlesticks. There we go. All right, so here's the filled ones. And that does look much better, actually. I really like the filled ones better. I'm going to switch to that again. Yeah, you're right. I do like those. Let me know if you guys like those better. I like these much better here. There we go. That's actually much cleaner. What news is pumping Nvidia right now? So Nvidia is surging up. Rivian's down. Robinhood is up. I think Nvidia is just surging up from just basic sentiment. I think Nvidia has just been on a nice little run since yesterday at about noon, and it's been running up since then. Yesterday at noon, it was at 453, 454. It's currently at about 470. So just a parabolic rise. Gold surging up as well. Gold is up. I'm trying to see if there's a catalyst for gold also. Let me know if you guys find one. Let me check Mumu here and see if we can figure out what's going on with some of these on Mumu. Walgreens starting to creep up a little bit. Let's check out the biggest news stories. And one of the reasons I like Mumu here, so like here's Mumu charts. I can look up whatever I want to look up here. I can look up Nvidia. This is free platform that comes with everything. I can pull up Nvidia here and pull up like a full breakdown in what Nvidia is doing. Like here's the 5-day chart, here's the 1-day chart, here's the 1-minute chart. I can look at the capital trend. I can trade it right there if I want. I can go to news and see all the recent news stories. Nvidia had a news story that dropped where it was initiated by Melius Research with a $625 price target. And that was today. And so that might be one of the reasons they're up. Again, big price target for Nvidia. You can see it up to almost 470. You can see all the recent announcements for Nvidia's changes in beneficial ownership. I can research and do some stuff, add some notes to it. Like if I want to add notes on like buy entries, I can look at related stocks in that same sector. See AMD, Apple, Capital One, Travelers. Just look at other stocks that are similar. I can trade options on them and get like free unusual option activity. I can look at analysts' ratings, see short sale analysts, short interest, all that good stuff here. Just really useful, to be honest, man. And if we keep going here, I can go to the explore section on Moomoo. I can build my own screener that looks up everything. I can go to the market hotspot and see what's the best performing sectors: EV, solid state batteries, gene editing, solar, Wall Street bet stocks. I can look at a Wall Street bet stock ARK, see what they're doing. I could look at a heat map and see what they did yesterday. Google down a little bit, semiconductors up, consumer electric up, software up, banks are really green, insurance diversified up, auto manufacturers up, and everything else is mixed. I can see the biggest, hottest stocks in pre-market right here. One of the biggest, most underused parts of Moomoo. Like you hear me talk about Moomoo, they are a sponsor of mine. One of the most underused parts of Moomoo is this paperfolio section. Incredibly useful, incredibly useful. Like I've had sponsors that their sole job was something like this. And so to add this to an actual trading platform that's got zero commissions, that you can trade the entire time in pre-market, is really useful. So again, I can go to any of these guys. I can go to this guy and see he's up about 80% on Riot. I can find somebody, this guy on Fubu, he's up about 61%. So you can click on these guys. This is like a paper trading competition, and you can follow them. You can follow them, and then you can see what they're buying, what's helping them trade, and learn what like profitable traders are doing. You can see this guy bought all these different stocks: Nvidia, LAES, TYGOW. And you can kind of see when he bought it, where he bought it. This guy, billionaire, bought IONQ and CRSP. Courtney here bought Fubo. For Fun bought Rivian, Upstart, Mara, Neo. You can see their portfolios and see what they're doing well, and look how well this dude is doing. And so you can kind of see what they're doing in paper trading. You can test the strategies yourself. Just super useful, to be honest. And again, options has free unusual activity, which is a monthly subscription. Again, Moomoo is a sponsor of mine. And Nvidia, you can see Nvidia starting to pull back some. Moomoo is a sponsor of mine, but if you open up an account and deposit at least $100, you get 5 free stocks. So think of the percentage return just for depositing $100. You're going to get at least 10% immediately back just for depositing $100. You get 5 free stocks. I got like Palantir, which I think is appreciated some too. If you open up an account and deposit over 1,000, you get 15 free stocks. 15 free stocks. If you deposit over 5K, you get the previous 15 plus a free share of either Google or Tesla. And I did get Tesla. And so take advantage of this. Again, Moomoo, even if you're not stock trading on them, being able to use these tools is very useful. You can check out the link right there if you want to help support them. They are a sponsor of mine. I definitely appreciate the love and support. Thank you so much. We're going to pin it to the top of the chat if you want to check it out. But yeah, let me know how you feel, guys. Waiting for some other stuff to get involved with. Morgan Stanley drops their earnings in about 7 minutes for MS. So Morgan Stanley earnings are in about 7 minutes. Again, I'm going to pull up Moomoo and figure out what they showed up as. Let's see. All right, so here's Morgan Stanley right here, and you can kind of see their short sale, short interests starting to rise over the last year. See all these different short tools from Moomoo here, which is just super useful. You see their buy ratings, analyst ratings, target prices. The OSC is severely overbought. The trend is bearish. So just really useful data here, to be honest, man. All right, so we did get a little pullback in Nvidia. Bank of America is still trying to pop. What about the dollar? I'm sure the dollar is probably... Yeah, this is way better. The charts are way nicer with filled candlesticks. Palantir rip it up too on AI hype. All right. So yeah, we do have Morgan Stanley, and then we got retail sales data coming out, team. So Morgan Stanley and then retail sales data. All right, guys, less than 5 minutes. Less than 5 minutes. All right, guys, we got retail sales data here. And so again, core retail sales data here. Let's see. All right. Yes, we did have Bank of America earnings, Morgan Stanley earnings. We got Morgan Stanley. All right, so again, Bank of America, Nvidia pumping up a lot today. Tesla. Less than 3 minutes, guys, or less than 2 minutes here. You can see Nvidia still pumping up at 468.70s. Bank of America is still trying. And again, I'm going to put up Morgan Stanley right now because Morgan Stanley's about to drop their numbers. Here's Morgan Stanley here. Let's see what they do. Anything. Again, Morgan Stanley currently, guys, is expecting 114 EPS on 13.51 billion in sales. Again, 114 EPS on 13.51 billion in sales. Waiting for Morgan Stanley to come out with their data here. Again, we do have some other stuff popping up. We got out of Tesla. We did get out of Tesla, but we had a nice green trade. We're now effectively green on that one too. How does Moomoo compare to Thinkorswim? I like Moomoo better because it has better resources and tools. Yeah, I'm streaming right now. All right, here goes Morgan Stanley data, guys. 30 seconds, 30 seconds. We'll see what Morgan Stanley does. They're right here on the left. You can see they're currently at about 87.50 or so, 87.50 for Morgan Stanley. Yeah. Well, options are just a different game. Options are good if you don't have that much buying power and you want to like get more bang for your buck in terms of BP. That's where options are good. Chipotle made first ever franchise deal to expand to the Middle East, according to CNBC. Morgan Stanley did just drop their numbers. Here we go. So Morgan Stanley is out. They posted second quarter net. They posted EPS of 124, revenue of 13.5, 124 and 13.5 versus 114 and 13.51 expected. So it looks like they came in a little bit light relative to revenue. So it looks like revenue came in light, but EPS did better than expected. All right, so you can see a small little bounce up here on this. Again, Morgan Stanley out with theirs. They showed 2.2 billion in second quarter net revenue. Second quarter EPS was 124 again versus 114 estimates. 124 versus 114 estimate. Again, sales of 13.5 versus 13.51 expected. So it looks like they came in better than expected for EPS. A little bit light, but basically break even for sales. And again, we'll put this up on screen. Again, 124 EPS versus 114 estimates. Revenue of 13.5 billion, in line with estimates. So we're going to put this data up on the screen. All right, so, or actually, yeah, here we go. So we're going to put this up on screen so you can see it. But here's Morgan Stanley right there. Let me exit out of some of these. All right, there we go. All right, so here's Morgan Stanley on the screen right there. They're not really doing that much either. They had a little pop and then they pulled back a little bit. Nvidia's still bouncing back up some, so we'll see if they actually hold. And then now we got core retail sales data in less than an hour here. So we do a retail sales data. All right, so Morgan Stanley Institutional Security net revenue was at 5.65 billion, down about 6.12 billion year over year. All right, guys. So yeah, Morgan Stanley bounced and then pulled back, and now it's just kind of quiet here. Not really doing too much anymore. Nvidia's still looking pretty strong, though, to be honest here. So Nvidia's still pushing up. Next, we got core retail sales data coming out. Twisted Metal, man, the OG PlayStation game, dude. I remember that game. Bro, y'all never heard of Twisted Metal, dude? You had the ice cream truck. You know, it was kind of like a car, like a shooter, but like you were driving around, so it was like a vehicle shooter. Yeah, I used to love it, dude. I used to play Twisted Metal. Yeah. That's correct. Yeah, you gotta have 25K. It's a U.S. regulated broker, so I mean, yeah, you're gonna have 25K. All right, guys. So again, you can see Morgan Stanley bouncing back up a little bit here. Yeah, that's the OG game, man. Again, Nvidia is still towards the top of that range. Yeah. Yeah, I remember Twisted Metal. It was good, dude. I used to love Twisted Metal. It was just good. Y'all can hear the music, right? You should be able to. All right, guys. We got less than an hour before retail sales data comes out. Less than an hour. Big week. Yeah, it is a big week, honestly. Today we got retail sales, and that sparks off one of the bigger earnings weeks All right, so yeah. So that's our sparks off one of the bigger earnings weeks. Today we don't really have much else except for some bank earnings after retail sales. But tomorrow we have European CPI coming out. European CPI dropping tomorrow. We got building permit and housing starts data tomorrow morning. So building permits expected at 1.5 million. Housing starts expected at 1.48 million. We also have crude oil inventories at 10:30, dropping at 10:30. So again, we'll see if they do anything good. In terms of earnings tomorrow morning, though, we do have some earnings. Also today after the opening bell, we got IB and Walgreens. Wait. WAL is okay. So no, we have Western Alliance, which is a bank, and then IB. You know, so yeah, we'll see. But there goes. Just texting me right now. Lockheed Martin, didn't they release theirs for Lockheed? Oh yeah, Lockheed did just come out with theirs. Lockheed just dropped. Here's LMT right here. We'll put it on the right. Watch it. Nvidia pull back a little bit. Here's LMT. Still pretty light volume. Looks a little underwhelming for Lockheed Martin. They ended up showing a. Lockheed Martin showed 673 beat 645 estimates. Sales beat estimates at 16.69 versus 15.91 expected here. So again, here's Lockheed. I'll put this data up on screen. Do you worry about Disney? I think Target's fine too. Like again, as an example, or Bernardo, Target's. It's not like Target's failing as a company, man. Like Target's still doing okay. Their revenue is still doing okay. They dropped a little bit from this, but I'm actually in Target right now, green, on the long side. And so, and again, and nothing that I do here has anything to do with politics, right? But I'm actually green on Target. Nicely green too. And we're gonna wait for the opening bell to happen. But yeah, we are green on Target. Our average price on Target right now is $129.50, and it is at $130.50. So we're up about $1 a share on Target. So again, none of my trades have anything to do with politics. I think like something that traders need to understand is that you need to take your political bias and throw it out the window when it comes to trading stocks. Like I'm pretty neutral politically anyway, but like I'm looking for value. So like if I see a healthy company that drops really big on emotion, I'm buying that up. I don't care what it is. Doesn't matter what the political stance is or anything like that. I don't care about any of that stuff. Same thing I did with Disney. And so yeah, again, when I see Target have a low PE ratio and drop really really big, I'm usually there to buy it up. Target was at 180s earlier in the year. It's under 130, or at least it was. So yeah, I'm gonna buy that up. Target's still gonna be fine. I went to Target yesterday or the day before. They had tons of people there. Tons of people are there. So it's not like Target's just struggling. It's not like they're empty. Target's doing fine. And I know that's not a convenient truth if somebody wants to like be really political or has a bunch of political bias. But again, I don't really care about any of that stuff, man. I really don't. I'm just kind of here to buy up stocks if I think they're cheap. Spilling coffee. Yeah, it sounded like it was just a lag on your end, Stuart. Hey, what's up, Alex? Let's see if I can get out. Thoughts on Snap? I think Snapchat has earnings. Is it next week or this week? I can't remember. But Snapchat does drop their earnings sometime soon. I'm not exactly sure, exactly when Snapchat drops their earnings. I'm pretty sure it's sometime soon. I want to say it is. It's not Wednesday. I want to say it's next Tuesday or Wednesday. It might be next Thursday, actually. Let's see. No, it's not next Thursday. It might be next Wednesday. No, maybe it's next Tuesday. Okay, yeah, so Snapchat drops their numbers next Tuesday. Snapchat, the problem with Snap is like I thought it was cheap when it was at $10, $7, $8, $9, $10 a share. And again, I don't know if you guys remember this, but like I bought up Snapchat when it was at like $7 and $8. And when I bought it up, it was like right after earnings. Like Snap had dropped big percentages from earnings. And we just got filled on our target sell. So we just sold, 40% of our target position on. We're up about $1 per share. So I just kind of locked that in, and that's great. But no, I bought up Snapchat on one of their last year's earnings reports. I don't remember which one it was. And they were at like 7, and they were at the high 7s, low 8s. And I bought it up. And dude, I had so many people talk smack to me about the trade. They're like, "Oh, bro, you're buying Snapchat. What a terrible trade you're getting involved with on Snapchat." And so I ended up making a bunch of money. Like it ended up bouncing back pretty quickly on me, like big percentages, and I ended up making money. I ended up selling at like $10 or $11 from like entering it at like 8. The problem with Snapchat now is that it's just up too much for me. Like again, I'm not saying it's gonna fail. I think there's still a good chance that it goes up, but it's just not cheap enough for me to want to buy it anymore. If it dips down to $10, $9, I might consider it. But up here at 13 plus, it's just a little bit too up there for me to want to buy it. I need cheap value, and I just don't see it with Snapchat right now. It's slow because of earnings, Michael, as well as economic stuff coming out over the next few days. All right. All right, so yeah, Morgan Stanley is dumping down here, guys. Wow, look at Morgan Stanley dip here. Wow. Morgan Stanley is falling back down some. Is there an argument in a dip buy? What's the PE ratio for MS right now? Hey, what's up, Lurkin Luke? I sold a cash secure put on Disney. That's why I'm asking. Thanks for sharing your opinion. 100%. But I think the move that you're talking about has already happened. So like if you're talking about a correction from worrying sentiment there, that correction's already happened. Disney was at 110, 115 bucks. Disney was at 110, 115 bucks months ago. And so Disney has dropped from 110, 115 all the way down to 85. And I think that's objective value. Again, maybe I'm wrong. I could very easily be wrong, and maybe Disney just dumps down. If it is, I'll probably just sit on it. I'll probably just sit on the trade. But I'm going to buy it up and take that risk. Again, maybe it's wrong, but I've already made enough on Disney to where even if I'm losing on this trade, I'm still going to be okay. And I'm down less than $100, so I'll be all right. So we already had Morgan Stanley, Bank of America, Lockheed Martin, Pinnacle, I believe. So yeah, today we've had a bunch of different ones. Bank of America, Schwab drops at 845. But yeah, so far on the earnings report today, we've had Bank of America BDPS beat sales, Morgan Stanley BDPS beat sales, Lockheed Martin BDPS beat sales, PNC Financial BDPS beat sales, Bank of New York BDPS beat on sales, Mercantile Bank BDPS beat sales, Synchrony BDPS beat sales, NVS BDPS beat sales, CATC BDPS beat sales. So that's a pretty big list of beats today, guys. So all the bank stocks and earnings. All right, so again, we're gonna post this, but yeah, they all beat on EPS, beat on sales. Pretty big. All right, so yeah, BAC, MS. Yeah, so again, you can kind of see everything here. And the last one to come out that we'll see if they beat EPS, beat sales is on Schwab. But again, you can kind of see what I posted to Twitter here. And again, give your boy a follow on Twitter. We post all this stuff. Give your boy a follow on Twitter. You can see everything basically beat on EPS, beat on sales here. So basically everything beat on EPS, beat on sales. Look at this. So we got 88 cents. Bank of America, Morgan Stanley, Lockheed Martin, PNC, BK, Synchrony, Novartis, and CATC all beat EPS, beat sales. So really good earnings season for banks. It's interesting though, because like we're not seeing huge green action in a lot of this stuff. So we're seeing a lot of we're not seeing huge like green action in this stuff. So we're having good earnings, but a lot of these are not going up from this report. You can see Morgan Stanley down a little bit. You can see Bank of America out a little bit. What do you think of Ford after just 6% dropping? I'm not sure about Ford, man. I haven't really been watching it. Is it good? I don't know. Ford down to 14th. I mean, maybe there's an argument it did buy. If you look at a 4-hour chart, I think Ford looks interesting. There's Bank of America popping back up a little bit. There's Snapchat. Here's Morgan Stanley. And again, we do have retail sales data dropping in less than an hour. But Morgan Stanley is breaking down on this report, which is interesting because, again, a lot of these had good results. Chop till they raise rates? I don't think so. I think everybody already expects them to raise rates. I think it might be chop until Tesla earnings tomorrow. Might be choppy this morning until we got this stuff coming out. GM almost at 1-year low. Yeah, I don't know enough about GM to really get my attention in investing in it, to be honest. Maybe it's good. I don't know enough about it. Coca-Cola, nicely green on, still on that one. Somebody talked about Disney again. Things have changed. Sure, but I think they've already corrected from all those things, though. Trade 1, 2, 3. So, like, I think they've already dropped again. Disney was at like 120s. In August of last year, Disney was at 120s. They've already dropped a lot, and they've dropped a lot as the market was going up. And so when that happens, again, I think the move's already happened. And so because of that, I'm kind of here to scoop it up and buy a dip. And I've made a lot of money on Disney over time. Like I really have. Verizon and AT&T. Yeah, I mean, I don't like Verizon and AT&T as companies, though, Alan. So I don't necessarily think they're cheap. I think the problem with Verizon and AT&T is simple. And I've talked about this before. I actually made a TikTok on this like a month ago on why I thought these were in trouble. And again, I told you guys these were in trouble, and I truly do believe that. And I'll explain why. The reason I think these are in trouble, both Verizon, both AT&T, is because competition is here. Like, you do not need to lock yourself into a freaking 2-year contract with your phone carrier anymore. You don't need to lock yourself into a 2-year contract with your cable company anymore. And so there's competition in regards to everything now that is going to eat away at AT&T and Verizon over time, and Comcast especially, because again, you don't need to lock yourself into a 1-year plus, 2-year plus cable deal anymore. You can get Amazon, Netflix, you can get Fubo, you can get Hulu, you can get Sling TV. There's just so many streaming options that give you the same stuff that these cable companies give you, but with no contract and for cheaper. You know, the only question mark is internet. Like internet sometimes has a monopoly, but again, even on internet, I think there's other options for internet outside of these companies. And I think these companies are going to come out with their own version of like no contract stuff. They're going to come out with their own version. Like AT&T is going to come out with their own, or already has a no contract option. Verizon already has a no contract option. But again, what's going to affect them is the margins. So like they can compete with these other companies and put out their own version of no contract based carriers, but they're still going to lose tons of money over time relative to what they are now. And so again, these companies are in trouble. AT&T, the use case is dwindling for AT&T. The use case is dwindling for Verizon. And again, it's because of competition and streaming. You don't need these companies anymore. You don't need to lock yourself into a super long. The only people that are still locking themselves into like a super long-term contract for these companies are usually older people who don't really know any better, who are not super tech savvy. They're just going to kind of buy whatever these companies offer them because that's all they know. They don't really understand that you can get it much cheaper and better. Like I get more cable TV services right now. Right now I have Hulu, Netflix, Fubo, Amazon Prime, and I get more content in those 4 things, 4 different apps. I get more content in 4 of those apps than I ever did with Comcast, than I ever did with AT&T, than I ever did with Verizon, than I ever did with DirecTV, for much less than I'd paid for just one service of AT&T, for one service of DirecTV, for one service of Comcast. I pay less now and get more content. That's the difference. That's what's chipping away at AT&T. I don't think Coca-Cola drops their earnings until tomorrow, or it might be next week. I'm not sure. I have to go check. John, what's your feeling about the Netflix earnings call? I think Netflix will be interesting. Netflix has had a really big year, man. It's just up a lot. It's at 450s, man. That thing is just bounced back crazy high. Honestly, though, like, and again, I know, like, to some people who are just kind of being weird, it might come across as like I'm bragging, and I kind of am, but like, I think I called this move on Netflix, man. You know, I told people I thought it was cheap at 180s. I told people I thought that Netflix had been producing high quality content that I actually liked. I thought Netflix's content had been getting better and better and better, and I think after they dropped, you know, that those major drops where they dipped all the way under 200, I was telling people I thought it was a good dip buy. I should have put my money where my mouth is, but regardless of whether I took the trade or not, I think I did take the trade. Like I took some of these trades. I just got out pretty early because I was up so much. But yeah, regardless of whether I was able to capitalize fully on it, I still called it, and I'm really proud of that. And I think it does build my confidence up a little bit. Like I'm starting to notice where my true edge is in the market, and I think that is identifying extended stocks on the downside. When everybody else is telling me they're done and that they're going to fail and that all this other stuff, I'm usually there to buy it up again, because I think people are just so biased, especially with stuff like Disney, right? Like people are just so biased against it. You know, it's political ideologies, right? So they just hate Disney with a passion. They, you know, confirmation bias, and so they really hope it fails, right? But I don't think it's going to. And again, regardless of any way I feel politically about anything, which I'm pretty neutral, I still think it's probably a good dip buy. I think if you buy Disney right now and you hold it for a few years, it's probably going to go up. Schwab. Yeah, Schwab drops their numbers. The parks aren't empty. Schwab did just drop their number. So here's Schwab. There's Schwab. Schwab is actually out right there. They showed 75-cent EPS, beat the 71-cent estimate. Sales of 4.66 billion, beat the 4.61 billion estimates. I know, but Rick, again, I really like this is the last time I'm going to try to talk about this because we just get a lot of like really political arguments. You're looking at it as a moral issue, right? Like, I don't care about the moral implications of any of this stuff. I'm going to buy stocks that I think are going to perform well over time, right? Like, listen, you should never, like, if you want to choose whether to pay for those products yourself, that's one thing. But when it comes to investing and trading, you got to take morality out of it, man. Like, again, one of the problems the AMC community faced is the AMC community decided to push a moral battle with AMC, right? So they wanted to make it a moral thing, like a moral issue. You know, Adam Aaron saying, "Oh, these companies that are posting these glitches are evil." He's at Benzinga, and all these companies are evil. He tries to make it a moral issue because, again, that's where you can wrap people up emotionally in it. I don't care about any of this stuff. I'm just gonna buy it if it's cheap, you know. And I think we're talking about it too much. Bitcoin, where's Bitcoin at? I haven't even seen Bitcoin lately. Bitcoin down under 30K. So this is the first time Bitcoin's dipped under 30K in a while, in like a month or two, right? Yeah, so this is the first time. I mean, Bitcoin actually dipped under 30K for a little while on the... so Bitcoin dipped under that for a little bit yesterday. It's right around 30K currently. You put a daily chart up. We're still within that range, but we're testing the bottom of the range. So if we follow the support, Bitcoin could bounce a little bit right here. Yeah, again, Stuart, I'm just not going to argue about it anymore. It's just too much. Again, it's too divisive and political for me, bro. Again, I'm very politically neutral, but stocks that I trade and invest in are not going to have anything to do with my political stance, regardless, you know. And so, yeah, I'm looking at PE ratios, not, you know, any of that stuff. Hey, what's up, Maximus? Bitcoin will fall. Maybe it is. Yeah. Your bias is for against companies are going to do you no good in trading. It's just going to make you sit on losing positions most of the time. Again, the AMC example is the best example I can get. Like, AMC traders took it upon themselves to do the moral fight, to be the good guy, to punish the hedgies, to be the good traders. Like, you know, but again, how do you talk a bunch of retail investors into holding a depreciating asset that's dropping 60% a year? You tell them that they're fighting the moral fight. Don't sell, AMC guys. You're fighting the hedge funds. You're doing good. You know, that's how you talk them into it. And again, that's what they did. And now AMC traders are down huge, sitting on a losing, depreciating asset. Why? Because they made it a moral battle. And moral battles, you're always going to lose in the stock market. Bitcoin try to break 28,150 first, and then may bounce and may go further. Yeah, we're right at that support line now. We're right at that support line now. Again, we'll see if it holds, but we're right there. Tulips. Yeah, again, I'm watching the Bitcoin right now. AT&T still dipping down some too. Morgan Stanley is trying here as well. We do have retail sales data coming out, but look at Morgan Stanley. Actually had better than expected EPS and sales, and they're now they are dipping down some here. We still got about 30 minutes or so until retail sales data comes out. About 30 minutes. We got about 500 people here, so hey, if you haven't already, hit the subscribe button, hit the notification bell. All right, team. And yeah, look at Bank of America volatility playing out here, but Morgan Stanley down a lot. Anything else that looks good? Where's Tesla at right now? Here's Bank of America on the left side. Here's Tesla in the middle. Tesla all the way up to 290s here. Still getting pretty volatile. They do drop their earnings report tomorrow, and that's going to be a big, interesting thing to pay attention to here. Yeah, I saw Lockheed Martin. Keep watching Pfizer. Yeah, I made a bunch of money in Pfizer recently. I ended up selling. I'm out of it already, but I did make some money in Pfizer for sure. Can't remember where I bought it. Probably should have stayed in it, but I did make some money in Pfizer. All right, guys, retail sales data in less than an hour, in less than 30 minutes here. I'm going to put a timer up so we can see it. We're going to put a timer up here. How much longer we got? We got like 27 and a half minutes or so. All right, so here's the timer. I'm going to stick that thing right there so we can see it. But yeah, there's the timer. We got 27 minutes left. BYND, I just don't like it. I don't like the company BYND. I think they're incredibly risky. They've had a huge downfall, and they overestimated their market interest. And I think if you look at a long-term chart of it, it's one of the worst-looking daily charts I've ever seen. This thing has dropped from 239s back in 2019, $240. It's at $16 right now, $16. The problem with Beyond Meat is that they have overestimated their interest. People don't care about lab-grown fake meat. Vegans don't care that much about it. They don't care that much, right? Like lab-grown fake meat, and it's incredibly expensive to produce. And so it's one of the reasons you've seen Beyond Meat get all super hyped. And then they realize that vegans are not vegans are all about natural and like let's be organic and natural. Lab-grown fake meat doesn't sound organic and natural. It sounds like freaking Dexter's Lab stuff, Doesn't sound like the right move for vegans, and so they're not going to eat it. It's too new. There's not enough testing on the effects of this lab-grown meat long-term on the human body. There's just not enough results to test it to really know whether it's actually safe or not for us. I mean, it's relatively safe. I'm not saying it's not safe, but my point is like the amount of consumers that are willing to take that risk and eat BYND and impossible stuff. I'm not saying I've actually had Impossible burgers, and they were pretty good. I'm not even gonna lie, they tasted good. But the amount of people that are interested in doing that is very, very low. It's just a very small sample size of people, and so having a super expensive BYND price is just going to be risky because, again, as much hype as it gets, there's just not enough people that actually want to buy it, in my opinion. I've been saying this for years. I've been saying the same exact thing. And during that period of time that I've been saying it, Beyond Meat has dropped from $150 down to $16. So again, we'll see if it holds, but I don't trust it at all. Right, exactly. As a vegan, I don't eat any of that fake meat. I'm not trying to be a fake meat eater. I just want veggies. Exactly. Nobody buys it. Nobody wants it. The market share is like, the other problem is like Impossible Burgers doing a deal with Burger King, right? Like, bro, thinking vegans are going to go to Burger King is your first problem, right? Bro, it's kind of like serving caviar at Chick-fil-A. Nobody's going to freaking buy it, dude. Nobody cares. Vegans are just not going to go to Burger King, bro. Doesn't matter what fancy food item you have at Burger King. Nobody's going to buy it there, man. Again, I'm wondering who's making these deals. Who's setting this up? Of course, I get it. They might be desperate, and these sound like desperate moves, but again, just not enough interest, man. They're spending their time growing something that not enough people actually care about. IBM, a PE ratio of 14. I don't trust it. again, I just don't trust it. The reason I don't trust it is because I remember IBM's demise from being like the biggest computer company in the world to what they are now. And I don't know what IBM even does right now. And I usually try to stick to what I know. And I don't know what IBM's doing, you know. All right, guys, hit the like button, hit the notification bell. I don't know. Insects, there might actually be an argument for like insects being healthy. Like if you think about what's healthy for humans, right? Like what food products are actually healthy for humans? It's stuff that our hunter-gatherer ancestors had access to, right? So it's like our hunter-gatherer ancestors would walk around picking berries. When they did eat meat, it was like very lean meat, like deer and stuff like that. Um, and outside of meat, they would walk around, they would pick berries, right? They would pick berries. So what are superfoods? Like strawberries, blueberries, you know, stuff like that. They're superfoods. Why? Because they reduce inflammation in our body. Why do they reduce inflammation in our body? They reduce inflammation because they're the least foreign thing to our body. They're what our bodies are used to, like evolutionarily speaking, right? Like our bodies have evolved to consume these things. And so they reduce inflammation. And again, so you can look at all the big superfoods, and most of the superfoods are going to be things that, like, if you think about it, our hunter-gatherer ancestors had access to, right? What foods that are bad for humans, like the worst foods for humans to consume, are things that our hunter-gatherer ancestors did not have access to, right? So what does that have to do with? That has to do with white flour, processed like white bread. Terrible for us, causes lots of inflammation in our body, which in turn, inflammation causes all the modern issues that humans have, which are cancer, acne, you know, the list goes on and on about like what inflammation does to us. And so white flour, bad for us. Why? Because our hunter-gatherer ancestors didn't have access to it. It's more foreign to our bodies, right? So when our bodies do that, we produce inflammation in our bodies from foreign things that our bodies aren't necessarily used to. Same thing with like processed sugar. We didn't really have access to processed sugar, and so when we consume it, it causes inflammation in our bodies. Now, all of this to say that you know, the whole thing about everybody getting upset about eating insects, I'm sure insects are probably pretty healthy for humans. Why? Because our hunter-gatherer ancestors probably had to eat insects a good bit, right? So they probably don't cause inflammation at the very least in humans, at least not a ton of inflammation. And I'm sure that they're probably pretty healthy to consume in that regard. But again, it's all speculation. I don't know. Yeah, I mean, Michael, I'm gonna talk about whatever I want. If you continue to be toxic just because I'm talking about something outside of stocks, you're just gonna get banned. And you're always welcome to go watch another stream, sir. I'm gonna talk about whatever I want. I sit here for 4 hours a day, dude. And so of course we're gonna talk about other things outside of stocks. And not a reasonable expectation, kind sir. We do have Tesla bouncing back up though. I'm still watching AT&T. Somebody mentioned AT&T. I don't think I'm interested in buying it, but I am kind of watching it now. I knew they do have a divvy. Yeah, beer's definitely not good. Yeah, I'm gonna talk about whatever I want. That's what I'm saying. Cruising for a good day emoji. Yeah, maybe. All right. Anything else y'all see cheap? Again, I'm in Target right now. We did buy Target, but I did take profit in Target already. So we did take some profit. We're still sitting on the rest. I'll probably let the rest ride. We have a very small share size now, but we've already taken profit on this already. So we can kind of just hang out and let it rip up more. And if it doesn't rip up, we'll still be okay regardless. But we are green on a long position on Target. We bought it. Our average price is 128. We are at 130s now. So that's good. So yeah, retail sales data drops in 20 minutes. I don't know what we wanted to come in at. The market is a little bit mixed in terms of the reactions to retail sales data. So again, retail sales data is dropping today. The core retail sales data is actually a pretty big reason, or a pretty big release relative to the regular one. So core is expected to show up month over month for retail sales at 0.3%. Last time it was 0.1%. So they're expecting a 0.2% increase in core retail sales month over month. Regular retail sales, base retail sales is expected to show up at 0.5% versus 0.3% expected. So we'll see what that does as well. Canadian CPI also drops this morning as well. And then we also have industrial production and business inventory data that comes out too. So we got some stuff, but I don't really cover industrial production numbers. Tesla's still bouncing back up. It's over 290s. Yeah, I don't think it's necessarily safe anymore, Rolls. I really don't. I think that people are going to stop using it long term, and I think you got to look at all AT&T's business income streams, right? One of them, like, let's just take a look. One of them is phone services, right? Providing phone services. People are going to be less likely to get locked into a long-term phone deal with all the different options with no contract-based phones. So that's number one. Phone subscriptions are going to dry up some. They'll still do them, but their margins are going to get worse because less people want a phone service that locks you into a long-term contract. So that's number one. Internet services with AT&T. That's one of their businesses that might stay the same. It just depends on if they have a monopoly. The third part is DirecTV cable, right? DirecTV cable is 100% going to lose momentum over the next few years. Absolutely going to lose momentum. Why? Is because people don't need to lock themselves into a long-term AT&T DirecTV contract for cable. They can buy Netflix, Hulu, Amazon Prime, YouTube TV. There's just so many different options now that the cable providers are absolutely going to be losing value over time in that niche, in my opinion. Maybe I'm wrong, but I think that they're going to lose interest. They're going to lose sales. They're going to dwindle in terms of sales. And I think that's very obvious. And so those are the main business models for AT&T. I'm not saying they don't have other income streams, but when 2 out of 3 of your business models are going to start losing momentum, I think that's bad for the stock. Now, they do pay a divvy, and so maybe that divvy can help justify holding it long term. I'm not sure. It's already an established company. I just don't trust it. I don't trust AT&T at all. I think the use case argument is dying for them. And again, maybe I'm wrong. I don't know. DirecTV is a satellite company. Yeah, but satellite companies as a whole are not going to be needed anymore. Like the only satellite company that might still be around is Starlink or whatever it is, Elon Musk's. You don't need to slap a satellite dish on your home anymore. You know what I mean? You just don't. You don't need to. Again, our internet has gotten so good where you can stream things without needing to slap a satellite dish on your home anymore. And so I think satellite dishes as a whole are going to go bye-bye. Again, Dish is one of the most obvious weak stocks that are probably going to be obsolete within 5 years, in my opinion. Because, again, they just don't have a huge use case. I'm surprised Dish is even still around, to be honest here. And, again, I said this, man, how long ago did I talk about Dish? I talked about this on Twitter. All right, so again, let me see. I posted on Twitter. How long ago did I post on Twitter for Dish? Let's see. I remember I posted about this. Okay, so April 20th. April 20th. All right, so let's take a look at this. What is April? Yeah, so, okay. So, yeah, April 20th. Dish was at basically $8. Dish was at basically $8 a share. All right, on April 20th. And I made a Twitter post about this and I said, question, anyone have a system for identifying obsolete businesses like Dish and capitalizing on it, I have to imagine that everybody can see this drop coming with the evolution of TV tech and streaming. And this, I had the same talk. I had the same argument there. Since I posted this April 20th on 420, everybody's favorite number. Since I posted this, Dish has dropped from $8 a share down to $6.50. $8 a share down to $6.50. That's a pretty big percentage drop. That's about a 20% drop since I posted this. And so again, the reality is a lot of these are going to struggle, man. A lot of these are going to struggle. Again, satellite dishes as a whole are obsolete. You don't need them anymore. Internet's gotten so good where you can stream cable TV without needing to put a satellite dish on your home. Even in like really like out there in the country, like even way out in the country who don't have access to big cable companies or whatever, you don't need to slap a satellite dish on your home anymore. You can use your own streaming services and get more content and stuff than you ever would with a satellite company. If they do slap a satellite dish, it's going to be something like Starlink to get really good internet so that they can then stream. But again, I think the only people that are still going to be using companies like Dish are going to be, the older population that don't really understand the other options that are available to them. But I think over time, that's going to dwindle down as well. Maybe I'm wrong. Again, I could easily be wrong. And again, I do take some opinionated stances on things, but I haven't been wrong so far. Again, I posted that on 420 about Dish, and Dish has dropped like 20% since I posted that. So I haven't been wrong. Yeah, but satellite internet has nothing to do with satellite TV, is what I'm saying, Chris. Like, yeah, Starlink is going to be the big one that people use now, but that doesn't have anything to do with satellite cable. Satellite cable as an entire industry is dying. The technology is obsolete and outdated, without question. That's not even arguable, without question. Satellite TV. And again, I'm going to preface this with, like, Chris, I know you and I disagree on some things. It's all love. Hopefully these type of disagreements don't spark any like resentment on your end, because there's no resentment on mine. I understand. This is the stock market, so we're always going to have opposing views, and that's all good. It's all good. We got about 12 minutes left. 12 minutes. Yeah, they had a monopoly in my area as well, Ruma. Is this sales data, retail sales, relevant to Amazon? It's going to be relevant to most blue chip companies. But what it's going to do specifically to Amazon, I'm not really sure. Yeah, but I mean, Chris, I think this view specifically is very subjective. And so I think, number one, I think you can look at the data behind it. And again, it's not really something I want to argue about. My point here is that, like, arguing like one is fact versus not is not accurate. Like, this is a subjective, opinionated thing. And so one's not right or wrong. We're talking about the future of satellites, and so it's not really a fact or not type of thing. It's more so a subjective opinion thing. And my subjective opinion is that Dish is probably going to fail. Again, I think most satellite companies that operate around cable are going to be obsolete within a 5-year period of time. Probably less than that is my guess. But again, maybe I'm wrong. I don't know. Bitcoin sniff it out, 28.5K. We'll see. I'm not sure. Again, I guess only time will tell who's right here. We'll see what AT&T, Dish, all the other satellite companies do long term. Again, I think they're probably going to fail. What's with WFC and Bank of America drop? So most of them had good earnings, but I think a lot of them are down big. Any forecast about news? I don't know what retail sales data is going to really show up as here. We're going to have to wait and see. Yeah, just kind of like a preface. Listen, we might disagree on a lot of different things. Hopefully, none of it is super emotional on y'all's end, because it's definitely not emotional on my end. Again, time will tell who's right about the satellite companies, and it's all good either way. It's all love either way. It shouldn't really matter too much. It should never be one thing where it's like, if I have an opposing view on satellites, or I have an opposing view on whatever it is, that makes it. And that makes any of you guys like emotional about anything. If y'all are confident enough in y'all's predictions and directions, then, who cares what I say? It shouldn't matter too much, Again, my view on satellites are that, especially specifically satellite cable providers, are absolutely going to fail long term. You just don't need them anymore, right? Like, you just don't need satellite cable providers anymore. They're too expensive for what they offer, and you're going to get cheaper, better options in things like streaming services that give you cable streaming services. I think over time, that's probably going to be the route that most things are already heading in. But maybe I'm wrong. I don't know. What is the expectations here? So for core data, we are expecting 0.3% versus 0.1%. Retail sales expected at 0.5% versus 0.3%. The bigger reading a lot of the time is core retail sales. So again, they're expecting core retail sales to go up 0.2% on the month. Last time it came in at 0.1%. This time they're expecting it at 0.3%. Regular retail sales expected at 0.5%. Last time was 0.3%. So they're expecting retail sales to rise both times. Core retail sales is, again, the most important one. Retail sales gauges the change in the aggregate value of sales at the retail level across the country. Again, core excludes food and energy. So with excluding food and energy, that's something that you want to pay attention to. And again, we'll see what happens with it. Discourse is necessary to efficient market. Yeah, 100%. Like, again, we're going to disagree on things. I just hope like nobody here takes that and like builds up resentments on y'all's end because I disagree about specific things. I think sometimes like stock trading can be emotional, right? So like if you're holding specific companies, or if you like specific companies, if you're using specific companies, and then I come out and I'm like, hey, these companies might fail in the next 5 years, that might make some people feel some type of way about it. And again, I'm here to just say it's all love. We might disagree. It's okay. I certainly take some polarized viewpoints, I will say this. My accuracy with these viewpoints has been pretty spot on. I said this about BYND years ago. I said it about Peloton years ago. I said about a lot of these companies years ago, and over time has proved me right. We'll see if Dish is, again, but again, you can kind of see the posts I made about Dish on 420. And if you look at Dish's chart since then, here's Dish right here. A yearly chart. Why does the chart look like this for Dish? Oh, wait, that's not Dish. Yeah, so here's Dish chart right there. Again, here's Dish's chart. Here is April when I said that. So this is the drops it made since then. And then here's the post. So yeah, I said this. Here. And it has since dropped. And again, the question I had at the time of this, again, retail sales data dropping in less than 10 minutes or less than 5 minutes. The question I have is very true. Does anybody have a system for identifying these obsolete type companies and then profiting on the downside with them? Like, what's the most efficient way to profit on the downside where you can still have like a good bet? Like, if I wanted to bet on Dish's downfall in April, what's the best way to take that trade? Is it better to just use shares? Is it better to use put options? I'm not sure. Are there some ETFs that are like bear ETFs against satellites or something like that? I'm not sure. But there's also an argument that they could be just extended on the downside now. Man, I hope both of these miss. Yeah, so again, we'll see. Retail sales data, I'm not sure if it's going to be something where, I know yesterday we had, yesterday, what do we have? Yesterday we had, all right, we got about 650 here. Yesterday we had, what do we have? Yesterday we had the New York State Manufacturing Index, and that came in much better than expected for manufacturing, and the market dropped. And so with retail sales data coming through today, I'm going to put the SPY up. We got about 2.5 minutes left. With retail sales data coming out today, I don't know whether higher or lower than expected reading is going to cause good or bad action. I really don't know. Here's the Q on the left. Here's the SPY on the right. All right, guys, we got about 2 minutes exactly left. Dish shares will being up today because you mentioned it. Yeah, maybe. Lockheed Martin already dropped their results. All right, guys, we got about 1.5 minutes left. CPI data is not today. We also, I think we threw it in sub-only mode. Yeah, we did throw it in sub-only mode. Everybody announce yourself. Show us that you're subscribed. We appreciate it. Sometimes it does soon. Sometimes it doesn't. It just depends. It's not always something that we're going to get a lot of like volatility from. Sometimes we do. Sometimes we don't. It varies. It really does. Sometimes we get really good movement. Sometimes we get bad movement. Sometimes we get a lot of volatility. Sometimes we get a little bit. All right, team. Retail sales data. All right, so we're still trying to hold. We got over 700 people here. We got about 20 seconds left. About 20 seconds left. Again, hit the subscribe button. Hit the notification bell. We also have Canadian CPI coming out. Here goes retail sales data. 10 seconds, guys. 10 seconds. 0.3% for core retail sales. Regular retail sales expected at 0.5%. Here is the release. Canadian CPI came in higher than expected at 5.1%. Retail sales came in at 0.2% versus 0.5% expected for retail sales. Again, 0.2% versus 0.5% expected for retail sales. Again, subscribe. We cover this data very quickly. We cover this data very quick. Retail sales 0.2% versus 0.5% expected here. It doesn't look like core is out yet, but 0.2% versus 0.5% expected for retail sales data. Core retail sales isn't out yet, but 0.2 versus 0.5%. We're going to put this up on screen. Again, we're putting this up on screen. Retail sales 0.2 versus 0.5%, lower than expected. The market is liking this here, maybe because of inflationary fears. I'm not sure. We're still waiting for core data to come out. There's the regular retail sales data. Still waiting for core data to come out. All right, there goes core. So core just came out. Came in at 0.2% for both versus 0.3% expected. So lower than expected universally here. The Q is pushing up more than the actual S&P is, but 0.2% for both. Lower than expected retail sales data for both. Core retail sales came in at 0.2 versus 0.5%. Or no, versus 0.3%. So core came in at 0.2 versus 0.3% expected. Regular retail sales came in at 0.2 versus 0.5. I'll put this up on screen. All right, so here is the data. Again, so we'll see if this causes some uproar in markets. We did get an initial spark of volatility here, but we are now kind of sitting tight. Not really doing too much in terms of action here. Dropping now from the lower than expected reading here. There's dropping down to 450 on the SPY. 450 on the SPY. Actually, where do we check for real-time news releases? Right here. Again, if you hit the live button next to the play button, you'll get caught up on the stream. You'll be able to see it as soon as it comes out. Again, we usually get lots of people here because we cover it fast. And again, we covered that one within like 2 seconds, or within less than like a second. We covered this one. Came out within like half a second. We dropped it pretty quick. Yeah, so both missed. But again, this isn't something that like, okay, so to put it into perspective, over the last year or two, it's been a neutral thing where sometimes we get higher. Sometimes like the market wants higher than expected retail sales. Sometimes it wants less than expected. It depends on whether we have inflation fears or not. If inflation fears are there, it is something that sometimes the market wants to see lower than expected readings because that means less inflationary problems, especially something with like retail sales, where if we want prices to go down, we need sales to dry up. And if sales don't dry up, if sales come in higher than expected, that can sometimes be seen as a negative because of inflation woes. This looks like it's not the case. So this is something where we had less than expected and the market's dropping, probably because inflation has been showing consistent improvement over the last year or so. Yeah, and if you haven't already, guys, check out Moomoo. Moomoo is a really dope platform. I'm getting a lot of the news updates on Moomoo. If you see how I cover it quickly here. And so again, you can kind of see like Morgan Stanley, we covered this. It gives you a really nice detail. I can go to news and see all the big news that comes out for these stocks. I can go to Capital Trend and see what the capital is trending in. Let me show you this so you can actually see it. I can go to Capital Trend and you can kind of see what the capital is trending there. Here's a 5-day chart, 1-day chart, just very, very useful. I can go to announcements and see the latest filings for Morgan Stanley. I can go to research and put notes. I can look at related stocks to Morgan Stanley and see what they're doing. I can look at options and trade options like this. Really, really useful. Again, this is a platform called Moomoo, zero commission stock and options trades. If you look at the rest of their platform here, one of their most under talked about uses of their platform is their paperfolio section where you can follow other traders. You can see what they're buying. Like for instance, this person is up about 20% on the month. You can see what they've bought and what they're holding, what their portfolio looks like to earn that 20%. And then you can follow them and kind of look and see what they're trading, how they're trading. It's called the paperfolio section. I can go to explore and see a free heat map, see what's performing, see what's moving in pre-market, build my own scanners here. If I want to, I can go to watch list and build my own scanners. I can go to hot strategies and build strategies. I can pull up screeners, use institutional holdings, see broker ratings, IPOs, announcements, divvy payouts, look at futures to see what they're doing in futures. I can look at the crude, natty gas, all that good stuff, 6-month, yearly chart on Moomoo. Zero commission stock and options trades. They also give you free unusual activity. And if you deposit at least $100, they give you 5 free stocks. I got Palantir and a bunch of other ones. If you deposit at least 1,000, they give you 15 free stocks. If you deposit over 5K, they give you the previous 15 plus a free share of Google or Tesla. And I got Tesla, and it has appreciated since they gave it to me. So, hey, I will take it, guys. If you haven't already, again, check out Moomoo. Great platform, really useful. I switched over from TOS to Moomoo because they're open the entire pre-market. I can trade at 4 a.m. if I want. There's the link. Check them out. They are a sponsor of mine, though. Look at the Q dip, though. So the Q is starting to drop down. We'll see if it actually holds. Again, also check out Topstep. Topstep funded account program for futures. They give you a demo. They test your skill. If you can hit the target while following their rules, they fund you between $50,000 up to $150K with a 90% split. And you get to keep your first $10K. So if you make $20K, you get to keep your first 10. So you get $10,000. that you can withdraw from them. And then you get 90% on the rest. And then you get to keep their other 9,000 versus 10,000. So out of 20K of your first withdrawal, you get to keep 19,000 of that. So you basically have all the same rewards that you would if you put the money up yourself, but your risk is limited. The base combine's only $49 right now. So if you lose, you're only down $49. If you're good enough to pass the test, then you still keep most of your profit anyway. And again, the patterns in futures, there's no PDT in futures. You can day trade short, buy market, buy bid, sell the ask, just like stocks. The patterns are very similar in you can trade the S&P 500, the NASDAQ, currencies, gold and silver. The patterns in something like Tesla are very similar to the patterns in futures, but there's no red tape, there's no PDT restrictions. And so if you want to actively day trade, the futures market is where you want to go, and a funded account program is probably where you want to go as well. If you want to check them out, again, they still have their huge sale where you get it for $49 a month. Again, great way to help support the channel. And we are going to be day trading on there pretty soon, coming up today after the opening bell. If you want to check them out as well, great way to get exposure to day trading. Regulated in the US, and they pay out millions, fund thousands of traders every year. They pay out millions in actual withdrawals on topstep every year too, when they're the most legit. They've been around for over 10 years. And so they're who I'm trusting them the most when it comes to payouts. Hey, good luck, O2. Stay safe there, brother. Yeah, all good, whatnot. Thanks, man. I'm torn. Do you think we are fearing recession or inflation more now? It feels like a recession, right? Yeah, to me, it does. I agree, financial. So I think the market's probably fearing a recession more than inflation right now. And I think the signs that we're not really fearing inflation are that the inflation numbers have dropped every month for the last 12 months. The Fed also paused or skipped during the last cycle, which means that the Fed is fearing inflation less right now. And wants to make sure that we're not going to go into a recession. So they're pausing so that it helps the banks. And then the banks are doing well. We had a bunch of bank earnings today. They are doing much better now too. So that's kind of where we are. All right, so today we have retail sales. Remember, tomorrow we have Tesla earnings. And so subscribe if you haven't yet, guys. We get thousands of people that tune in for these big earnings reports because we cover the data very quickly. We really do. We cover the data quick. So if you haven't already subscribed, hit the notification bell. I certainly appreciate it. All right, so we're going to get ready to day trade at the opening bell. We were mixed yesterday, so where we lost a little bit yesterday, and then we made some yesterday too. So we're a little bit mixed in terms of everything right now. All right, so we're going to get ready to potentially day trade at the opening bell too. Again, we're going to see, our goal is to get funded by the end of this week, and we're very close in a couple of the accounts. Fed will keep hiking rates. I don't know if they'll keep hiking rates. They didn't hike the last one. And so they might, but they didn't hike the last one. You know what I mean? So they didn't hike the last one. They're still potentially raising rates. Let me check out. All right, guys. So again, we are going to get ready to trade futures at the opening bell today. Let's get ready. We're going to put this side chart up. We got Nvidia and Tesla there on the right. We'll see what the bank stocks do. We ended up making a good bit of money on some of the top step accounts that we had, and then I think we lost some on the other ones, and so we got to take it slow, be smart. All right, so we're good on that one. Let's do this. Let me know how you like this playlist. If you like this playlist, I mean, this is an old playlist, but all right, so here's the E-mini today. We got a downtrend, a noticeable downtrend on the E-mini currently. Probably brought upon by like Tesla testing lows. We got Nvidia up there. Let me gotta get rid of some of these. Tesla not testing lows. Tesla testing the bottom of that range. It's been pretty neutral and sideways. How was Bank of America earnings? Bank of America did better than expected, but still dropped. So Bank of America, BAC did better than expected, still dropped, still breaking lows, still looking weak. Same thing with Morgan Stanley. I mean, Morgan Stanley did better than expected as well, and then they still dipped. They're technically green on the day because they gapped up a little bit ahead of earnings, but definitely not doing as good. And so starting to dip down a little bit now too. Everything looking a little weak there. Could buy the dip a little bit. Let's see Apple here. One thing I learned yesterday, I just got to be careful with the NASDAQ. It just moves so freaking fast, dude. I'm not trying to get stuck in that thing, man. That thing moves quickly. If you do trade it, like I think micros have a like micro E-mini and the micro NASDAQ. I think they're very volatile to trade. I think if you are going to trade them, they need to be in the NASDAQ, like micro NASDAQs instead of regular NASDAQ. I think if you try to buy the regular NASDAQ, that thing can just go against you super quickly. And so it's something that you just got to be really, really careful of. Let's see. I want the Pro. There we go. All right, so look at this big breakdown and everything here. I think this is mostly happening from the banks, but look at the S&P dump at the opening bell today. Target's still doing pretty good, man, despite... Yeah, most of the retail sales came in at 0.2%. Profit taken. Yeah, I think a lot of stuff's moved up from earnings, and now they're correcting on the downside. It is something that I typically short, and I don't mind shorting, but I need like a bounce up here first. Like if we can bounce up here, I'll short on that downward trend, see if we can make money on it. But I need like a larger bounce back. All right, so there's a little bounce back here. I'm gonna go ahead and short one contract here, see if we get a flush back down. Nvidia starting to fall back down to 467s too. I'm watching Nvidia really closely here. Well, we did get a little bounce back up. I'm probably going to cut this really soon. I could also add to it, but the question adding to it is what's the likelihood of a reversal? I don't think it's super high. Or no, I think a reversal could happen, but it would have to reject here at this support level right here. And so we could take the trade, but that needs to be our limited risk. And so we're going to add a little bit more to it and just make it limited. This is the 150K combine, and so we definitely have more room here. So if I am going to take more than one contract of the regular E-mini, it's going to be in this account versus the others. If I lose $100, it's not the end of the world. We'll be okay. We'll just kind of reset and trade again. People underestimate how difficult it is to trade on stream. It really is. It's something that like a lot of the time I'll trade on stream, I'll lose, and then I will close the stream down and get into my own zone trading and then make money back that I lost. That's happened a couple different times this week. So watch the dollar index. Okay, so the dollar index moving up a little bit on bank weakness is what this is. Rejecting a little bit at the top. Yeah, we're just going to have to cut it. So we got a little bit of a loss in. It's just bouncing back too much. Yeah, but we took our limited risk, and this is a 150K combine. Losing $100 is a lot when your portfolio under 5K though. Well, yeah, it's all relative to your portfolio though. Like again, you should be using good risk management in that regard. Where if your portfolio is less than 100, well, less than 5K, you should be trading much smaller. You know, I know the big thing is like you can make 10% in a day. And again, I talk about this a lot, which is that like a lot of the people telling you can make 10% in a day are usually doing some variation of the martingale roulette strategy. And what I mean by that is like typically they'll say that and then they just lose a bunch of money. They'll make money, they'll add to their losses, they're double down their size, and then when they lose everything they've made and they just don't show the stream or whatever it is that I might try to take another contract here. We're in one contract here. Just take it. If it's small. I like that rejection towards the previous top. And we are in a downward trend. Yeah, I guess what I meant to say here is you should limit your risk if your account's small. And I know the cool thing is to like, I can take $5,000 account and turn it into 100K in a month, bro. I know you got people telling you can do that. You can't. You can do it, but you're taking huge risks to where you're risking your 5K every single time you do it. And so if you're trading a small account, you need to be trading small. If you got a $5,000 account, making 30, 40 bucks a day is the goal. You know, you make 30, 40 bucks a day in that thing and be fine. That's what you should be shooting for, something like that, as opposed to trying to roll your stack into 100x. Again, the martingale roulette strategy basically means like you double your bet every bet. So like if you bet $5 and you lose, you bet $10 you lose, you bet $20 you lose, you bet $40. So you're gonna have to lose over 6 times in a row to actually lose, and that might sound all good and fine, but that happens, you know. And in trading, what a lot of these gurus are doing is they're just adding size to it. They're adding size to it. And so they're winning most of the time. And for a rookie trader, they might not understand. They might think they've got some super powerful trading strategy, which they're really just adding. They're just doubling down on their size until they win. And you're going to win most of the time adding to losses. guys. Like adding to losses, you're going to win most of the time doing so, right? The problem, yeah, we're just going to cut this as well, and we'll probably wait on the rest. But yeah, you're going to win most of the time adding to your losses. The problem is that when you lose, you're going to lose everything. And so it's really easy to get a very highly probable win. You could win 80% of the time or more just adding to your losses. The problem is that it's not sustainable. And so like one time the trade's just going to go completely against you and you're going to lose everything you made. And that's what a lot of traders are doing, and they don't even realize it. So where they think they've got some super profitable system where they can make 10% a day or whatever it is, but you just got to wait. Eventually they're going to lose on one of those trades and their whole account's going to be gone. I trade the NASDAQ, but again, I was talking about it earlier. It's just really risky. Yeah, now we've had 1, 2, 3, 4, 5, 6, 7 green candles in a row. Again, I've lost a little bit. I'm just going to sit tight. I just don't think pushing too heavy into this is the good move. I'm just going to wait. We'll get some trades to get in. Trade Q and Russell and Dow. I usually trade like the E-mini. I'll trade the Dow. I'll trade the NASDAQ with very small, with much smaller size than like typical. Yeah, I mean 1 to 3% a day is not sustainable either, brother. 10. It's just not sustainable, man. You might be able to do it with a small account, but again, if 1% was truly sustainable on anything, you would be the richest man in 5 years. Now, you might be able to do it with a small account, but understand it could be another variation of the martingale where you're, in order to make that 1 to 3% a day, what are you risking, man? You're probably risking your whole account every time you do it. Maybe not your whole account, but a lot of it. I mean, you can maybe make 1% on average, but again, just the risk that you're taking there is too much for me personally. I'm just not really again, I'm very conservative with how I trade. I'm not really trying to get rich quickly in the stock market. I think the more you try to get rich quick, the worse you're going to trade. But again, maybe I'm wrong. I don't know. Yeah, the dollar index is moving up a little bit. You see the market start to fall back down. We're definitely still in a downward trend of some sort. Apple, let's see. Another thing I've been thinking about is like taking regular micro positions, but looking at like patterns that show up on like the hourly chart and trying to trying to play those. You know what I mean? All right, guys, we got about 30 minutes left. 30 minutes. Well, I mean, you might have a big day one day. You know what I mean? Like, you might have a big, crazy day one day. I'm not saying that that's not something that you can do. Everybody has big days. What I'm saying is that, okay, so again, a lot of new traders come in this game, right? Like, they come in this game and they buy a course, right? And like, the people selling courses, in order to justify, like, it's really hard to sell a course if you tell people the truth. You know what I mean? It's really hard to sell a course to tell people the truth, where it's like, if you told them, hey, look, you know, it'll probably take years for you to really be successful, and when you do, you know, in order to really make $1,000 a day or so, like regularly, like consistently make $1,000 a day, you're going to need like $500,000, you know what I mean, to do so safely without risking your account. You know what I mean? So in order to tell somebody that, it's going to be a hard sell for their course. They're not going to be able to sell their course as much, right? So what do they instead tell people? They say, oh man, I can make 1% a day. I can make 5% a day. I can make 10% a day, is what they tell them, which is total nonsense. Like, you're never going to be able to sustainably do that, but like, they need to sell courses, right? So they need to kind of fudge the expectations a little bit to talk a bunch of naive retail traders into doing it. So what do? They say, oh, look at me. I can turn 5K into 100K in a month if you just buy my trading course, guys. I'll show you exactly how to do it. Or they're just trying to get clicks. And so in the end, it's just not sustainable. Like, and again, what happens is, like, you get a trader that might make $10,000 one day, like have a really big day. They might make 10K, but they risked like their whole account to do it. And then you take that trader, and then all of a sudden that trader starts to say, yeah, man, I'm making 10K a day in day trading. It's like, are you actually making $10,000 regularly every day? Or did you just make $10,000 on one specific day? And now, in order to sound cool, you act like you're making it every day. That's what happens a lot of the time as well. But traders need to just have reasonable expectations. Like, you're not going to be able to get rich quick. The more money you try to make on any given day, the more you're risking regarding your account. You know, so like, if you try to make 10% a day, you're going to be risking your account. It's the martingale roulette strategy. So it's like, yeah, you could do it. You're taking a huge risk to do it, and it's not sustainable. Eventually, you're going to lose everything trading like that. So ROL says not true. Well, tell me you bought a course without telling me you bought a course. Yeah, I do see industrial production and capacity numbers. We'll see what happens. Yeah, a lot of it is psychological. Yeah, with it, for sure. And you get it. It gets this thing where it's like a bunch of people who have already bought courses, right? Like, if you're one of those traders that got talked into the get rich quick scheme, you're following some mentorship program that's promising you crazy, ridiculous gains. All you got to do is buy their course or buy their service and pay for their mentorship program. And then you got somebody like me that comes along and says, hey, you don't have to do that. That's a waste of time. They're just lying to you, so you buy their course, right? That might be a hard thing to hear, right? It might be a hard thing to accept, right? So instead, they're going to get mad at me. They're going to say, oh, that's not true. And they're going to get upset with me about it because I'm the one because the truth hurts is the easiest way to put it. Yeah, we got FOMC bar. There is no way to learn without somebody teaching you. Yeah, I mean, somebody's got to teach you, but you don't need to spend money on some type of mentorship program. The reality of it is, most of the content that are in that, and I'm not against them completely. Like, there's some good ones, okay? I'm not against all of them, all right? So let me put that out there. There's some good ones. But you could find everything that's in that course, everything that's in that mentorship program for free out there on the internet somewhere. You don't have to spend thousands of dollars learning. Um, and again, when you do, it's just wasting money because you could find that. We're on the internet here, guys. Like, you can find that stuff for free. Like, there's so many free options that you don't need to pay for that stuff anymore. And the content that's in the paid ones are the same content that's in the free ones. Patience is real. Yeah, for sure. Sacks. Yeah, mistakes are the best thing to do. Or the mistakes can sometimes be the right thing. Like, losing money is necessary in the beginning too. All right, guys, we got 30 minutes left. We got 30 minutes. Losing money in the beginning is almost, I'm not going to say it's good for you, but when you lose, it kind of gets your mind right a little bit. Like, when you first start trading, you're just kind of clicking buttons. When you lose big, it burns, man. You don't like it. And so you're more intent on avoiding that moving forward after you lose. And so risk management systems are created from losses. And that's something that you can only really learn from experience, I guess. Yeah, he's going to tell me his mentor is different, architect, I'm sure. My guy's different. He took 5,000 and turned it into 200K last month. It's like, well, where's the proof? I'll tell you this, right? If any of these mentors were actually making what they said they were making, they would show you their broker statements every year or every month. You'd see their broker statements. Because, like, what better credibility building thing is there besides showing your broker statements? Like, if you're really making the money you say you are, show your broker statements every month, right? Not just one out of 12. What you'll see a lot is they'll be like, oh, they'll show their broker statements 1 month, and then you won't see their broker statements again for like a year. You know what that means? That means they waited for their 1 month that they were profitable, and then they showed you their broker statements. Like, look at me, I make this every month. It's like, oh, do you? Then why don't you show it to us every month? Again, I've been in this game for a long time. I kind of know how it goes. And again, I think sometimes I build up some enemies from being like I'm being, but it is what it is. I got to be honest about it. Yeah, trading's mostly like conditioning through repetition. And again, I'm not even claiming to be like some super profitable, greatest day trader of all time. I'm actually a much better swing trader than I am a day trader. But these truths are universal in trading, right? Like, they have to do with day trading, swing trading, investing, whatever it is. Like, they're just truths. What do you think of Warrior Trading? This guy seems legit. Also got a lot of free stuff going on YouTube. Yeah, I think I'm not gonna talk bad about anybody here. What I will say is that a lot of the penny stock gurus specifically are running chat rooms in which they're front loading onto sketchy, low float, manipulatable penny stocks, right? So say you got ABC low float penny stock. And low float means that it's manipulatable. Say you buy 30,000 shares of that low float penny stock, right? And you don't really mention anything to your following until you fully establish that position. And then you announce to your thousands of other traders in your chat room, your thousands of other traders, hey guys, I just bought ABC penny stock, right? What's going to happen to that penny stock? That penny stock's going to go up. It's low float. It's manipulatable. So when you announce to your thousands of followers, hey guys, I just bought this stock, that stock's going to go up. Right, it's called front loading, and then you exit your position fully and cause a crash in the stock, basically, and you leave a lot of your other followers sitting there holding on to those losses, while you exit fully profiting 30, 40K on the trade, right? Then a lot of those penny stock gurus, they will take the trade and they will take the profit that they made from pumping up these low float stocks, and they'll show it to their followers, and they'll be like, hey guys, I just made 20K. And it's like, well, sure, you just made 20K, but you made it pumping up a low float stock. It's not like, they're not going to be able to teach you how to do that because they're pumping it up with their following. You're not going to be able to do that. In fact, if you try to copy them, a lot of the time you're going to get stuck in like a crash. you know, and then they take those gains and they show it to their following, and then they say, hey guys, buy my day trading course. Look at me, look how profitable I am. Buy my day trading course, right? It's like, yeah, but you're just pumping up low float stocks by front loading into them. Like, your course isn't going to teach people how to do that. Your course is just going to be generic knowledge on the penny stock day trading that you can find for free on YouTube already. That's the issue with people like that, is like, they're not really making money the way you think they're making money, you know? And again, again, I don't ever really mention names. I'm not going to mention names here, but think about it. Think about it objectively. Yeah, definitely top 3. Not the greatest trader of all time ever. Definitely top 3. All right, so we do have a move up in the E-mini here. Big Short, yeah. Yeah, there's a reason a lot of the time, like, you'll see these big time penny stock gurus, like, the stock will get pumped up right at the high of the day point at the opening bell. Like, right at the high at the opening bell, you'll see all of a sudden their big sell alerts coming in. Why do you think they're selling then? It's because it's the most liquid part of the day, and they've established a 30,000 share position that they need liquidity for. And so they're waiting for the most liquid part of the day to dump the shares on all the other mentorees in their program that followed them into that trade, right? That's the most liquid part of the day. They're just manipulating them into doing it. Again, I don't mention names. I'm not being anybody specifically. I would never mention anybody's name specifically here. And I'd never know for sure. Like, I don't know for sure anything about any of this, but I think it's kind of obvious, I think, as well. But bro, thanks for clearing that up. I didn't think it was that way. I didn't think it was that way. Generally, they do. Yeah, I mean, they're going to give you basic generic stock data, right? Like penny stock data. It's just basic generic stuff. It's stuff you could Google for free and find that stuff for free. Same thing on YouTube. Like, you could YouTube that stuff for free and find the same stuff. That they're pumping out there. Again, penny stock market is mostly scams, man. Again, a lot of new traders get brought to it because of like buying power implications. Like, they don't have that big of an account, right? So they kind of have to trade penny stocks. Most of y'all are going to be better suited trading futures. You know, the futures market has no PDT restrictions. You can day trade short. Patterns are very similar to like day trading Apple or day trading Tesla, but there's no PDT restrictions. And like, I'm talking about all this, but like, I do make money from sponsors. Like, I do make money from affiliates. I'm certainly biased in all of my sponsors' favor because they pay me money, you know, but I'm very transparent about that bias. But one of the sponsors I have is Topstep, and it's a funded program where they give you a demo. They test your skill. If you can hit the target while following their rules, they fund you. And to be fair, I think most people are going to fail these challenges because most day traders lose money. But it's a lot cheaper to try Topstep and lose that than put up 10K yourself and lose that. You know, it's a lot cheaper, and there's no PDT in futures. It's just a good way to test your skill. And if you're good enough to pass it, once you pass it, there's a 90% split anyway, and you get to keep your first 10K. So it's a good skill building thing for new traders. But again, I'm certainly biased. They pay me money, you know, but they're on sale right now for $49. If you want to check them out, here's the link. Let's this up. Yeah, Atlas, man. Atlas has been one of those groups, man, where it's like, dude, they so obviously did that, bro. Like, they obviously pump and dump stocks. They obviously pump stocks up to their following for personal profit, right? Now, the argument with Atlas is whether you consider that illegal or not. It's kind of a gray area on whether it's legal or not. It's kind of a gray area, but they 100% made like money pumping up stocks to their following that they knew were crap. You know, again, the question is that legal? I don't know. I don't know, but I don't think it's. But it's kind of crazy how you still have people defending that, because it's like, that's obviously what they're doing. They were obviously pumping them up. They were obviously doing it for personal gain. They obviously knew they weren't going to hold, and that when they announced that they were going to sell, it was going to crash the stock, you know. And so it's just, I don't know, man. In that situation, I don't know how to feel about it. You know, I guess if people still buy it, like, whatever, you know, but yeah, the problem with penny stocks, man, Justin says if you have 50K, then you can make a crap ton in those penny stocks, but you are definitely going to be risking a ton. I don't think it's worth it, since eventually you lose. I traded penny stocks for a long time, man. I really did. I traded them for a long time. Again, the risk is simple, is that, like, okay, you can make money in penny stocks, but penny stocks are a lot less consistent than like large blue chips. So penny stocks are going to move in such a volatile way, where like a lot of the edge is curbed down in penny stocks. Why? Is because, like, with penny stocks, let me think of the easiest way to put this. So with penny stocks, a lot of the time, like, there's a lot of things you got to worry about. You got to worry about dilution. You got to worry about a company. Like, what happens in penny stocks is, like, the company will pump themselves up, right? So say a penny stock goes up 50% in a week. If the company has filed like an offering on the table, they can wait for that stock to go up 50% when it's the most volatile, and then announce that offering and just dump the stock down 25-30% all of a sudden without warning, you know. And so it's like, even if you get good at trading penny stocks, which is arguable whether you actually can or not, even if you get good at trading it, avoiding like dilution, avoiding halted stocks that just gap down huge percentages, like the pitfalls there make the edge very, very, very slight, you know, very, very slight, to where it's going to be hard to really do so safely, no matter what, no matter how good you are. And when you add in the dilution offerings and news announcements, and the fact that you got to like find a new one every single day, and find volatility and avoid the choppy markets, it's just a recipe for losses. But again, to be fair, I guess any market could be considered that too, because nothing's easy in trading. So I'm not saying I'm good friends with like Relentless Trader. I mean, I'm not good friends with him. He's like a trading friend that has his own channel. So I'm not gonna say I'm good friends with him. But him and I are cool. And like, I know people like that are solid, and like they seem to make money doing it. So I'm not saying you can't make money in penny stocks. I'm just saying the market, the bad ones make the good ones look worse. You know, I guess it's the easiest. Anyways, market started to push up a little bit. We got about 17 minutes left. Well, they got sued by the Federal Trade Commission, didn't they? So, I mean, I guess karma did get them. I don't know. Why Schwab pumping up earnings? So Schwab announced earnings. They did better than expected EPS and sales. They're pumping up big. Look at Schwab. Yeah, Schwab's flying up to $63 a share. I like how you're giving up the game. I mean, you guys know, like, I burn bridges when I do this, but like, to be blunt, I make a lot of money doing what I'm doing right now. Like, I make a lot of money doing what I'm doing right now. Not even just in trading, but from sponsorships, from YouTube, from all this stuff. Like, I make a lot of money doing it. In order to sleep good at night, like, I got to be honest with people. Like, I got to tell people the truth. That's I got to be morally justified in doing it. You know, if not, I don't know. I feel like I got to do the right thing, as much as it's bad. And again, there's some good traders. There's some good courses out there. There's some great courses, some great traders in penny stocks and other markets. I'm not hating on all of them, but I don't know. I just see so many people lose thousands of dollars buying some sketchy penny stock course, and then they're upset about it. And then it's like, confirmation bias is so strong that it's like, if you spend that much money on anything, you know, it's going to be so hard for you to acknowledge the flaws in it. Like, if I spend $4K on a course, that's the greatest course I've ever taken ever. Doesn't matter what it says. It's the greatest course ever of all time. Somebody asked me, hey, was that course worth it? Oh, it's the greatest course I've ever taken ever. And so confirmation bias is such a strong thing. Like, that ends up trapping more traders into getting ripped off there, you know. Schwab's still breaking highs here. Again, I'm in one contract of the regular E-mini here. When we started to be up. Yeah. Hey, Christian, tell me you've gotten scammed without telling me you've gotten scammed. It's all good, bro. I'm gonna go ahead and take my profit there. Because again, like, here's the thing. People act like I'm just super bitter at the gurus, bro. It's not like I ever bought any of their courses ever. You know what I mean? Like, at this point in time, like, my views are comparable to a lot of these gurus. And so it's not like I'm bitter at these gurus here. You know what I mean? Like, I don't have any issues with any of these dudes. In order to morally justify running this community, I got to be honest with people. You know, and again, if you're one of those guys that spent a bunch of time and energy and money investing into one of these mentorship programs, what I'm saying might hurt. It might hurt a little bit, and that's okay. You know, that's okay. But in the end, it's not like I'm super bitter. You know, honestly, I live a beautiful life, man. I live a very fulfilling life. I get to sit here and talk about the stock market for 4 hours and make way more money than most people do. So I got a beautiful family, man. I'm happy. It has nothing to do with me being bitter at the gurus. It's just I'm trying to tell people the truth, and that's the truth, man. The truth hurts, but it's the truth. All right, so I'm watching the E-mini bounce up a little bit. Hey, my guy Justin, thank you so much, dude. I appreciate you. This is why I watch. This is why I listen to you most days. I want real advice. Yeah, thanks, man. Yeah, there's some good ones. I'm not saying they're all bad. Some news in what came out? Oh, it's definitely over 6 figures, John. Yeah, for sure. Like, it's definitely over 6. Definitely top 3 greatest income streams in the world right now, for sure. NASDAQ tried to pop up a little bit. We got a reversal up signal on the NQ that I'm watching, but looks like a good move for me to sell the E-mini. We'll see if it ends up continuing to go up, but we're mostly in a sideways trend. People are saying focus on the market, but the market's doing this, man. Like, that's the market right now. Ooh, wow. What a great freaking market. You know. Oh, yeah, we did have industrial production numbers, but that's not the biggest release, to be honest. Didn't really move the market at all. Industrial production came in at minus 0.4% versus 1.1%. Yeah, I'm watching gold too. Gold, I'm actually in right now as well. I talked about being in gold. And gold's doing nicely too. Let's get a poll here. I'm going to do a poll and I'm going to ask people. I'm genuinely curious. 74% of people said they think that we're going to raise rates the next cycle. You agree with my stance on gurus? Yeah. Vote on the poll. I shorted New Year high. I'm out. But yeah, thanks for becoming a member, Justin. I appreciate it, bro. Thank you, sir. Man, Schwab just flying up today, man. It's up to almost 183s. Oh, good, Justin. I appreciate it, man. Yeah, but for stuff like that, it's like $35 a month, Paul. Like, if you're talking about Chart Prime, that's like $35 a month, dude. There's a difference between paying for something out of convenience. And again, I'm okay with paying for a course out of convenience. Like, if you want to pay a centralized, like, you know, to get that stuff centralized to one thing for you out of convenience, go ahead. But that shouldn't cost $4,000 a year. You know, there's a difference there. And again, some courses are good. Some content is good. You know, I'm not against all of it. People take it that way because usually the people that are most upset are people who have paid for the courses themselves, or the actual gurus are upset with me because I'm hurting their business. And I understand. But So I asked people, do you agree with my stance on gurus? 85% of people said yes. 15% of people said no. That's a good option. Have you ever paid more than $1,000 for a course? Now, we don't need to do a poll there. Have you ever paid more than $1,000 for a course ever? Answer in chat. I'm not going to end this poll to do that one, but answer in chat. I think I'm going to buy this dip as well. I'm looking for this support to hold. All right, nice little surge up. See if we get a little bit more from this, but I really like this pop. We'll see if it holds. There we go. Nice little bounce. I just go ahead and take some off there. Just locked in some more. I'll take it. No. Yeah, I never bought any course either. No. No, never took a course. Yeah, I mean, I'm one of those people who, even if I really wanted a course, I mean, I'm not saying I would ever Google some of this stuff and find those courses available for download for free somewhere else outside of the course. I would never, ever, recommend you do that, S&P bouncing back a little bit. I don't know what that is, Joe. Oh, stocks. Yeah, I mean, do your thing, bro. Like I said, if it's under $400, do whatever you want to do. I'm not mad at that. I think a funded account program is going to teach people more than a course themselves. But all right, so out of 61 votes in about 4 minutes, 84% said yes, they agree with my stance on gurus. See, it's not just me. All right, so market started to bounce back a lot. Again, Schwab doing really solid here, man. Look at Schwab's numbers. So Schwab did come out with their numbers. Look, so Schwab posted 75%, beat the 71-cent estimate. Sales of 4.6, beat the 4.61. 4.66 beat 4.61. Here's Schwab's right there. So again, here's Schwab numbers. They did really well. And if you look at what their chart's doing here, look at them, man. Look at Schwab right here, just flying up. Hey, good luck, Joe. I got some cheap books on Udemy courses. Yeah, there's some cheap stuff. Can you write that off as educational? I'm not sure. I don't think I've ever tried to write off educational content. Like, I know I taught myself to code, years and years ago. And when I learned to code, because it was like something for work, I think I tried to write it off. I can't remember what what my accountant said. Schwab's still testing highs, breaking highs. Let's see if that drags the rest of the market up. Gold's still having a pretty good day too, but I'm not sure. I'd ask your CPA, not me. No idea. I think the current retail sales data prove that we are in a soft landing. We're not going to a recession, and we're not getting CPI going up. The company that fails already not doing well. Maybe. I think we all got ripped off by Guru when we first started. It's really hard to get me to pay money like that. Again, I used to, when I was like growing up in like the 90s and 2000s, I used to like download Pokemon ROMs and emulators, And so to get me to pay for a guru's course is going to be like pulling teeth. I'm just not going to do it, no matter how good they are or how much I want it. Like I said, I would never, ever, recommend Googling some of these guys' courses and just finding them available for free on the internet. I'll never recommend that, but yeah. Anyways, gold at 182.70s. Chat GPT is outdated info. Yeah, for sure. The Bing one might be a little bit more up to date. I think current retail sales data prove that we are in a soft landing. We are not going into a recession. I think the market's definitely looking a lot better. I think recession fears are getting lighter and lighter, but I also think like the way the market's reacting to economic data is a tell in terms of what the market is fearing, whether we're fearing inflation or recession stuff. So. Are we going to break through VWAP or go down? I'm not sure. Right now, it looks like we're in a little upward trend. If you see the trend here on the E-mini. All right, so here's the little trend I see us in right now. I don't know if we're going to hold this trend, but that's the trend I see. If we follow this trend, you could short at the top, but again, I have no idea what it's going to do. All right, Schwab all the way up to 64 bucks. Look at this on the right. Here's Schwab right here. Such a big gain from earnings here, man. This is one of the banks that actually had good earnings and gapped up from it. The rest of the banks showed pretty good earnings and then gapped down, but Schwab dragging the rest of it up. Bank of America up. JP Morgan's still pretty light. What was the other bank? Morgan Stanley. Morgan Stanley back up as well here, so looks like Schwab sympathy movement is dragging the rest of them up. Yeah, it's fine to think any individual one is legit, as long as you don't get mad at me for speaking my truth here. You know, maybe I'm wrong. I don't know. Maybe I'm biased. I mean, I'm certainly biased. Everybody's biased in one way or another. But I don't know. To me, it feels like I'm helping people. And y'all can let me know if y'all think I am or not. I know I'm sure some people are going to say whatever. I'm just bitter. And maybe that's true. I don't know. But I think I'm pretty happy. E-mini NASDAQ near perfect. We'll see. Recession talk is more of a manipulation in itself right now than a reality. Yeah, I don't think we're close to a recession at all. When's the next GDP come out? That's going to be telling. I think it comes out. Is it next week or the week after? I'll have to look. All right, so look, we did look. So again, I drew this trend here, guys. So we drew this trend. Look at the hold of it. So we drew this trend. I told you guys if we pull back and then bounce, that it might confirm it. So you see the trend that we're currently in here. We got the confirmation in it. Let me see when the next unemployment comes out. Is it? I don't think it's this week. I think it's next week. We got Philly Fed, jobless claims. Rest of this week. Tesla earnings are going to be big too. Nothing really on Friday. We don't have really much going on Friday. I think next week's when some of that data comes out regarding GDP. Let me check. All right, manufacturing and services, CB consumer confidence, new home sales. Okay, yeah, so GDP data drops next Wednesday, or next Thursday, I'm sorry. So GDP data drops next Thursday. It's expected to show up at 2%, which is good. 2% is good. So GDP drops next, expectations of 2%. Friday, we have PCE data, which is the personal consumption expenditure. It's actually what the Fed uses to gauge inflation. There's the market open. Sorry, guys, I was looking at that. We got the market open. We're still in this upward trend here. Look at Schwab, though, still pumping up after the bell. I don't think your facts are 100% correct, but message is important. Do you think the S&P will break to the upside? I really don't know. I'm seeing some downward action in Nvidia specifically right now. So Nvidia breaking all the way down to 463s. I think this could drag the market back down. It depends on what banks do, though. So banks are really strong. Nvidia is dropping pretty big percentages right at the opening bell at 464s currently. So Nvidia just dropped big. And I think if the question is, does this weakness continue in Nvidia? If the weakness continues in Nvidia, it's probably going to drag the rest of the market down. This music is sampled from Napoleon Dynamite. Oh, bro, Napoleon Dynamite is one of the top 3 greatest movies of all time. I actually watched it the other day. It's so much better now than it was when I watched it when I was like 10 years ago. It's just so much better. If you haven't watched Napoleon Dynamite since you, like now that I'm like old, it's much better now. I don't know about, it depends on what Tesla earnings show up as. Market's actually rebounding a little bit. Let me put Tesla chart up to see what they're doing. Tesla earnings are this week on Wednesday, so Tesla earnings are tomorrow. And Tesla's looking weak. All right, Tesla cracked under lows here. Schwab's still ripping up, though. Nvidia's still looking weak. Yeah, I think if you've ever actually hung out in the Midwest, you'll understand Napoleon Dynamite a lot more. Like my boys, like again, I just got back from Michigan, and so it's a lot more funny whenever you actually understand a lot of the references. All right, so flat open here. This trend's definitely done, though. I mean, we can make it a larger trend like this, but I don't know. It's an expanding wedge. Tesla looking weak, though, down to 287s, dropped from 290, almost 291s at the open to 287.50s right now. That's probably going to drag the market down. Big drops in the NASDAQ, too. A lot of weakness coming through, mostly on Tesla breaking lows, Nvidia breaking lows, too. All that's pretty weak. I'm going to give some time after the open and wait. Not push too hard. Try to give it time. I have 4 different monitors, RH. He said, why are you mostly watching the 1 minute chart? I have 4 different monitors, so I'm looking at the 5 minute chart on others too. Like this chart right here has the chart on my left has 5 minute. Tesla cracking lows. Look at Morgan Stanley pop up there. So Morgan Stanley's bouncing some here. Very choppy opening bell where we've gone up and down a good bit. Again, the goal is to build up a cushion first and then use that cushion to take a little bit larger risk. The NASDAQ is looking weaker than the S&P, I'll say that. Look at Nvidia. We'll see if Nvidia keeps falling. Again, Tesla has their earnings call tomorrow evening. Look at Morgan Stanley rip up. It's at 88.50s right now. So Morgan Stanley looks like it wants to break highs. I also see Tesla start to bounce. Nvidia's still cracking down, though. So Nvidia's still looking weak. Is the problem. All right, so we are getting a little bounce back up. Market looks strong. Still at the top of that expanding wedge. You can kind of see it here. Wait, do we have some economic data drop today? It's a pretty big falling wedge here. All right, so big down wick and then a retracement all the way back up. We're watching everything else. I'm watching Nvidia pretty close. I'm watching Tesla here too. Morgan Stanley cracked over highs for a split second. NASDAQ is just looking incredibly weak here versus everything else. So the NASDAQ is down big. Bank earnings already came out. Business inventories and home builder confidence. That index, did I miss? There's Monday. Oh yeah, we got business inventories. They're not dropping for another 23 minutes or so. Again, I am in a trade of the E-mini here. I've stretched the screen out a little bit too much. We're up about $87, $100, 125. We're just gonna go ahead and cut that. So we just got out of that at about 125 on the green action here. All right, so again, the goal is to build up a cushion first, and then see what we get from that. Morgan Stanley and Tesla bouncing at the lows. I think most bank earnings were good. Oh, wow. Look at Disney. Hey, the dip buy worked. You love to see it. We'll let it keep up. We added on that dip. I'm not trading on a 15-minute chart. I'm trading on a little bit of everything, man. I trade on the 5-minute. It depends on the time frame of the trade I'm taking. It's going to influence what time frame chart I'm using. So I'm on the 1-minute right now, but a lot of the time I'll trade based off of like the 5-minute, especially with like day trading. Disney testing highs again. I'm going to start putting calm music like this up. This is a lot easier to trade at with like calm. What about gold? How's gold doing? I'm in gold as well. Let's move it up today. That's nice. How you guys doing since the opening bell? We're mostly green. Schwab's still trying to push up, but Nvidia is the really weak one, to be honest, man. Nvidia down a lot. Target. Oh, I forgot about Target. Oh, damn, dude. I got it. Okay, good. All right, so we're nicely green on that. I'm going to go ahead and take another piece of Target off. Just lock it in. What about, what's the other trade I'm in? I'm in on Walgreens. Hey, look at Walgreens, man. I'm in Walgreens right now. I forgot I was in it. Remember, I bought it the other day. Nice. Hey, so we're going to take some profit in Walgreens. Where's my trading option? There it is. What kind of window is this? I don't want this one. Securities trading. All right, there we go. In Walgreens. I'm locking in Walgreens on my Moo account. Market out of that. How many shares do we have? We got 100 shares. I'm going to go ahead and take 40 shares off of this one. Just took 40 off. Locked in some profit here. Disney is surging up too. S&P's breaking highs. So that's nice. We're going to sit on that. Disney. Another green trade on Disney. I'm going to go in and lock in some more profit there. Take half of that off on Disney on TOS. All right. Well, nice little opening bell for me. We're green on everything. You see in TOS, we're up about... Here's TOS. We're up about 134 or so on the day. We're green in everything on our swing trades. So that's cool. The S&P starting to move up. Here's Mumu. We are nicely green in Mumu as well. Let me find the actual thing here. Hold on. All right, there it is. All right, so we locked in some more. Man, the market's surging up. I'll look for a pullback to buy the dip, but I got to wait for it. The NASDAQ trending negatively against the S&P today. The NASDAQ is actually gapping down some. I'm going to trade the NASDAQ again. I'm going to trade the micro because that thing's freaking crazy. All right. Sheesh, dude. All right, so we bought the mini NASDAQ, and this thing has just surged up. We got 2 contracts left. Or no, 3. I'm going to go and take half off. Man, look at how fast this thing moves. We did lock in profit when it was up big. We got 2 contracts left. I could probably be a little bit more loose on the rest. But man, the NASDAQ moves so quick. I could also add more to it. It might be a little bit time. It might take a little bit of time to get this. So the trade will be about flat now. I'm going to add 1 more contract to it, and then just be prepared to cut it if it doesn't retrace back up there. Well, we got a huge downward move. This is why the NASDAQ's quick. Look, this is 3 contracts of the regular micro where we're down $70 just fast. We break the low of this candle, I'm exiting. And we're out. That's all right. We lost. It's actually a pretty flat trade considering that we had already took some profit on the upside from it. Pretty neutral in this account, but man, look at the NASDAQ breakdown. And then look at, we do have a bounce up in the E-mini. I'm going to take 1 contract here. And then maybe add into 2. If I can. If not, I'll just take profit on the green side here if it keeps surging up. Schwab helping the market right now. See, Nvidia is really what's dragging the market down. All right, so we just got 2 contracts here, the regular E-mini, flat roughly. See, the NASDAQ's what's looking weak, though. The NASDAQ looks like it's going to crack low. Schwab's still surging back up. It's not the most heavily weighted stock in Schwab, but it's enough. Would like to get out of... I'm going to get out of half of that position and just lock it in. And then let the rest ride. See if we can move up some. There's 50. All right, so we just cut it right at the top. Locked in some more profit. Yeah, we're pretty flat on everything. I'm not sure if I can share it. I'll share it with you if I can. I don't know how. Yeah, the NASDAQ looks weak. Everything else is moving up for the most part. See, I might start trading mini NASDAQs, though. I like the price action here for these. Something I pretty regularly do is I also scale down my size if I'm down on the day. I think that's a good thing that y'all can learn from. It's like if I'm down big on anything, I'll scale down my size on the day if I need to, you know. And I think that's the opposite of what a lot of traders do, where it's like they're down big and they just kind of add more and add more and add more. Where I'm kind of the opposite. If I'm down, I usually just try to cut and cut my size down some, so I'm not just extended taking the trades. I'm going to go ahead and take a little bit more off of Walgreens. All right, so we just cut it. I think I got filled. Yeah. NASDAQ's finally bouncing up, and the S&P is ripped up pretty good. My stance on gurus is that a large majority of them, my stance on gurus is like, are they giving out reasonable expectations for stock market and trading? If they're not, then I'm against them. If they are, great. A lot of them are. Again, I'm going to preface this with like, look, I don't claim to make anything. What I will tell you is that I'm green on the year in 2023 on TOS, and I wouldn't be able to lie about it. I'd get in trouble if I lied about it. So I'm green on TOS on the year trading, and I'm green on Mumu trading on the year. That's all I'm going to say. I'm not going to say anything else. I'm not claiming to be the greatest trader. I'm not even claiming to be a good trader. My advice or my stance on gurus is most of them are giving out really bad advice on trading. They're telling you can make 10% every day and being sleazy. Most of them are just fake, I guess is the point. Did it just fill me? I guess it did. Yeah, that's all right. So we should be out there now. Okay, yeah, there we go. All right, so we're finally getting a little pullback here. I don't know whether to buy the dip or not. I'm tempted to, but no. It's better that you don't name him, Hassan. Wait a minute, this isn't the greatest trading channel on the internet. It's definitely the greatest trading channel ever in the world, for sure. Definitely top 3. But am I the greatest trader? No. We're the greatest channel. That's for sure. I could say that. We're definitely the greatest channel ever. I'm not the greatest trader of all time ever. Top 3. Schwab's still pushing up. Look at Charles Schwab. It is rising. It's at 66. Yeah, I would let you say him, Hassan, but again, it's just too subjective, bro. So it's like, if you're like, yeah, the only 2 honest guys I know are this, and then there are a bunch of scam artists, then I'm just going to be, then it's, you're going to make people, you know, it's just, nah. All right, I'm going to take a little bit more off of Walgreens as well. Locked it in. Pretty proud of my profit graph. Like here's my graph on Momo so far. Now, granted, I only opened this account a month or so ago, but like here's my profit graph. I'll take it. That's my graph on Momo so far. We'll see if we get some more. I'm gonna buy this dip and maybe add to. Wow, man, the mini NASDAQ just dumped down. All right, we're gonna add a little bit more to that. Whew, getting stuck at a big loss. You can see how fast the E-mini goes against you here. I'm gonna get very close to cutting this. I gotta give it some room. This is the 150K combine, so I gotta give it room, but I don't want to take too much risk. Luckily, we had built up a cushion prior to this latest drop because that's a sizable drop, and then a retracement back. I hope the retracement holds, but I can't say I'm super confident in this now. Maybe I'm just emotional about it, which is possible, I guess. Hey, there we go. Pretty much flat right now. Right flat middle ground. If I could take a piece of this off, I'd love to. We've been basically flat on, oh my gosh, what a drop. And then another retracement back up. Weird. Again, this is a big account. It's 150K combine, so I don't want to get scared out too easily, but man, volatile. All right, so we've established the consolidation period right here. Basically pretty much flat on this one. Popping back up a little bit. Oh yeah, I definitely lose. Top 3 most losingest traders in the world. All right, so now we're break even again. Hey, I'm gonna take half off, just lock it in, man. 2 contracts is a little bit too much for me, bro. There we go, $50 in gains. I think I'm gonna let the rest ride and get out break even if I need to, since I'm already green. I'm gonna give it a chance to come back up. All right, up about 75 on this one. I'm gonna go ahead and just lock that in. We're pretty flat on everything, believe it or not, today. But we caught the green trade. It's a little bit emotional of a trade for me, to be honest. Might wait for a little pullback and then attack it again. Schwab pulling back a little bit. I'm still watching Nvidia to see if it like tests these levels. Still popping all the way back up to the top of the range here. Let's draw a line right there, see if that means anything. I want to see if the NASDAQ will bounce back up some. I got 4 contracts of the mini NASDAQ here. Or I got 2 contracts of the mini NASDAQ. We're up. I want to give this last little bit time to ride. We had 4. We took half. Starting to learn how to trade the mini NASDAQ. There we go. Took half off there. Got the last contract in. Question is, do I want to add to this? I kind of do, but if I was going to add, I probably should have just stayed in the original position. I'll add a little bit to it. We'll take 2. It's going to hurt my average, but I can take a larger swing now. There we go. Looks like it was the right move. Going to take half off. See, I only got 1 contract now, so I'll wait for a pullback, see if I could add back in this, unless it just moves up enough. Nvidia is starting to bounce back some here. That's helping the NASDAQ run. I'm just going to lock the trade in, I guess. Pretty flat on everything, believe it or not, today, so not the biggest day. All right, guys. So yeah, we have right now we have business inventories. We've got bar speaking again in about a minute. 0.2% is what they're expecting for business inventories on the day. We did get a nice little bounce up. You can see Nvidia starting to rise. You can see this top level in the E-mini getting tested here. Right, big bounce over the highs. Look at the high of the daybreak right at that level here. Wow. A lot of momentum coming in. Just be careful. Bar could change things. So like bar could influence things. E-mini still popping up pretty big. All right, so market's starting to test the highs again. Let's see if it holds. Just trying. Yeah, I took a position in the E-mini NASDAQ here. You can see we got 5 contracts of the micro NASDAQ. So here it is right here. We're down like 40 bucks. I want to give it time to rebound back up. I know Barr is speaking. Hopefully he just doesn't say anything super negative that just drags us down. Again, we're kind of flat on the day despite everything here, but it's also kind of risky trading with him speaking because he could say something that like really changes sentiment in different markets and stuff. So just be careful. I like that down wick though. That usually means some buying power coming through, but it doesn't actually mean it has to. But usually it's a good sign. And we have this down wick. Yeah, there's the strength coming through. Consolidation. Still pulling back a little bit. We're pretty flat on the trade, so we got a nice little entry here, I think, on the NASDAQ. Oh yeah, we had business inventories coming at 0.2%. 0.2% for business inventories. If this trade doesn't work, I'm just going to cut it and be okay with it. Again, we're pretty flat on the day. We might be down like 100 bucks after this trade, which is very small for here. And, you know, I'm okay with it. We're still green on this account as a whole. We're back up. Yeah, this is probably my confirmation that it's time to get out. And it's all right. We actually kept it pretty tight today. If this breaks lows, we're definitely cutting it. We kept it pretty neutral in the day. Yeah, I'm going to get out there. Just too much risk. Definitely could have been a worse day. But again, if you haven't already, check out Topstep. Topstep is the last sponsored plug I'm going to do today. Again, just really useful. So like, look at the Market Oracle. Market Oracle I've been using a ton. It's for shorter term trading. This is a 5-minute chart. And again, Chart Prime is a trading view indicator service. You can use it in stocks, crypto, Forex, futures. You can see the link right there if you want to check them out. Just really useful, honestly, just really useful. Like, look, so I can't guarantee that anybody's going to make money from them. Nobody can. They're a sponsor of mine. I'm definitely biased. But like, look at this. Strong reversal signal here. Look at the huge drops you got in the E-mini afterwards. Strong bounce signal here. Look at the huge bounce you get in it. And again, you can use this in stocks, crypto, Forex, futures. This is the Market Oracle Pro right here. And again, it's 35 bucks a month. And then here is the regular Market Oracle, which I love as well. The regular Market Oracle is really good at like identifying tops and bottoms and reversals. So like, look at this. This is a 5-minute chart on the NASDAQ. It literally gave you the very top and then dropped for like hours afterwards. This is that dynamic reactor. It's like their own version of VWAP. Very useful. Very useful, but you can kind of see how powerful this is. And again, you can use this on Tesla. I could put up an hourly chart and use it on a longer term basis. And again, it's really good at identifying tops and bottoms. And so, yeah, check it out. Again, look, here's Chart Prime on an hourly basis, right? So every candlestick represents an hour. Look at this. Reversal down, drops for hours and hours. Reversal up, bounce for hours and hours. Again, reversal down, drop for at least an hour there too. Reversal down, drops for hours. Just really useful. Literally called the top here as well, drops. The top here drops, literally called the bottom here bounce. And so again, I can't guarantee you're going to make money. They're a sponsor of mine. Again, somebody said, oh, well, you can find this stuff for free. And that might be true. But again, it's a lot easier to have it consolidated to one place. It's just much easier. So again, check them out. Great way to help support the channel. I appreciate the love and support. Good luck, guys. Y'all be safe. Is gold flying up? I'm in gold right now. Hopefully it's moving up some. Morgan Stanley, guys. Wow. Disney. Gold. Man, what a good day for my trading. I will take that today, man. Good day. We've been waiting for it. But yeah, if you haven't already, guys, good luck. Hit the subscribe button. We'll be back tomorrow. Tesla earnings. We also have some stuff going on in the morning tomorrow with what else do we got tomorrow? Tomorrow we have housing starts and building permit data at 8:30. Housing starts and building permit. We also have European CPI, and then we also have earnings for some companies coming out tomorrow. So tomorrow we have Goldman Sachs tomorrow morning at the open. Goldman Sachs, Halliburton, U.S. Bank, Baker Hughes, NASDAQ, Citizens, First Horizon. And then in the evening, we got Tesla, Netflix, United Airlines, IBM, Las Vegas Sands, and more. So a lot of stuff dropping tomorrow in terms of economic data and everything else. Again, if you haven't already, check out Topstep. $49 combine. $49 combine for Topstep right now. Super cheap. If you haven't, check them out. Good luck. Love you all. Y'all be safe. See you guys tomorrow.